Mentioned SAP, Porsche and Julius Baer, Anna.
Yeah, absolutely, all in focus. So you've mentioned a number of reasons why we keep an eye on tech. Backward looking, the numbers from NXP overnight, the SAP numbers that unexpectedly, I think, dropped last night, or at least a taster of them. More further numbers to come from some of these European corporates in the days and weeks ahead. But we've heard a lot from the tech sector, a lot to hear from the US tech sector still to come from here. Certainly we'll focus in on Alphabet as we go through today's trading session. This is what we have then for Europe. As expected, a little underperformance in London, still early days and not by much, but down around 0.1% so far. The IBEX is also open and pretty flat this morning. The Stock 600 then has enough to go on and jumps just 0.1% at the start of trade. So it does feel as if it's a day where we could see some divergence across these European equity markets. US futures have been pointing a little bit lower. Yesterday we saw that bounce. We saw that appetite for all kinds of risk assets, just a little layer of political certainty to go on top of a whole layer underneath of uncertainty in US politics. And perhaps that was just enough to make those stocks rally yesterday. So we saw that in yesterday's session. Today then we see US futures pointing a little bit lower, and with all of that as the inputs, this is what we have across European equity markets. So real underperformance then coming through in London. Is that going to be an earnings story? Is it very much connected to the basic materials, the iron ore price, the copper price, all of that in focus through the Asia session then? Crilly, what do you see in a deeper look at these stocks?
Yeah, and I think your guess was spot on here, because when you look at that commodity read-through, that is the exact weight that you were seeing in the FTSE 100. Glencore, Rio Tinto, for example, pulling the market lower. You're also seeing the likes of BP and Shell also pulling the market lower. So that commodity story really magnified when it comes to the UK index story as well, despite the fact that if you look at copper prices right now over in Asia, they're only down about 1%. So again, perhaps this is just more of a risk sentiment story than anything else. To the upside, though, you are seeing some of the banking stocks higher as well. I'm sure curious how much of that, at the end of the day, Lizzie, is a little bit of a rates play. AstraZeneca as well is one of your biggest weights on the UK index as well. But we had a couple of stocks that you were keeping your eye on.
Yeah, I would just say travel and leisure top of the basket when it comes to the sectoral outlook. So a bit of recovery after the outage, perhaps for the airlines, higher 0.5%. But yeah, I was keeping an eye on SAP, and they are indeed up 1.2% this morning. We were mentioning about their second quarter results earlier, boosted by that AI demand. I also told you we should keep an eye on the European chip stocks off the back of that NXP Semiconductors guidance for the third quarter below estimates. And indeed, Infineon, ST Micro and Melexis all in the red by more than 1%.
Norsk Hydro certainly in focus. That's a slightly different story to the other basic resource stories, but it is a company that has disappointed this morning, and that stock is down by 4.6%. Should we go to SAP and what's happening there? Because we were expecting some movement from this business, their ability to roll AI into their cloud offering, seemingly something that can deliver from them, but we're waiting for an opening price on SAP.
We are waiting for an opening price. Remember that it is listed on the German index, so that takes a couple of minutes still to open up. So we're going to keep an eye on that as well. But when you look at perhaps the kind of other companies that may serve as a little bit of a proxy, I'm not actually seeing much of a read-through into the likes of ASML as well. Even though they are two fundamentally different businesses, they do tend to trade quite similarly to each other. But again, yes, no opening price there, although I am seeing outperformance in ASML, and I would starting to see early movement in an SAP now. It looks like it is higher by a whopping 5% this morning, contributing to the upside on the Stock 600 just now. So we, of course, are going to keep you apprised. Again, it looks like the tech sector is now moving higher. SAP and ASML both higher, but we're still, again, waiting for a little bit more of that volume to see how that all shakes out. We'll leave it there. There's a part of that conversation as well when it comes to the tech space is also going to be showing up on both sides of the Atlantic. Remember, there is a question not just of the earnings, but also a question of valuations. If you're starting to see this massive AI demand, what is the entry point for that on both sides of the Atlantic? We asked an equity strategist this very question yesterday. Take a listen to what he had to say.
The 12-month forward PE in Europe, I mean, it's at around 15 times or so, maybe a tad higher. But in the US, even if we exclude the Magnificent Seven, we are at around 20 times. So I would think that there will be some sort of convergence in valuations going forward. Not saying that Europe should see a massive re-rating, but mostly that the US will probably see a de-rating as the cycle is slowing. And then...
So that was Wolf von Rotberg, equity strategist at J. Safra Saracen, speaking on this show yesterday about convergence between US and European valuations. And we can discuss further with Bailey Wakefield, multi-asset portfolio manager at Aviva Investors. Great to have you on the programme, Bailey. I wonder if you agree with what you heard there from Wolf on the convergence between US and European valuations. You've been very positive on Europe, especially on the banks.
Yeah, overall, we have a market-friendly environment. We believe we're going to be avoiding a recession, and we have inflation coming down. So that's a good story for markets overall. And for the US, we are seeing that bad news is good news. So on the growth side, we're starting to see that come down a little bit, and that's providing a little bit of boost to the equity names. But on the European side, I mean, it's been completely dominated by politics recently, but we believe that Europe's at a cyclical low point and we'll be seeing some improvement from the earnings side.
When does bad news stop being good news for markets?
That is the question that we're all trying to answer, right? It's going to be how bad does that news actually need to be to start to see that turnaround?
Can I pick up on the banking sector? Good morning to you, Bailey. Can I pick up on the banking sector? Because as Lizzie was saying, the banking sector has been something that you have liked. And if what is your expectation there? Because some people have said as rates start to be cut, maybe they stop benefiting from the things that have driven net interest margin, for example, over the last couple of years as rates were rising. But then others focus on the fact, well, yeah, rates might be cut, but they'll still be higher for longer versus history, versus post-GFC history. So what's the sort of big picture around the European banking sector?
Exactly that. We are envisaging a world where we are not going to go back to rates that we saw, you know, that we've had for the past 15 years, basically. We're in a new environment where rates are so much higher, and that's going to benefit the sector. I mean, even if we do see a few cuts, if that's going to help economic growth, that will still benefit the sector.
And another one of your picks is around the Japanese market as well, and structural reform. And last year we got a lot of investors talking to us about this structural reform and a number of other drivers that were pushing them more towards the Japanese equity story. Has that still got further to run, do you think?
Yes, we believe so. Definitely the corporate reform story was pretty huge in Q1. But then as other factors come into play, we had the yen, more talk about central banks. That kind of corporate reform story got pushed to the side a little bit. But we think there's still a lot more to play for there. You know, we may have picked the low-hanging fruits, but there's still a lot more to go.
Bailey, hold on for a second. I just want to get a quick market check on some of these major stocks that we're watching. SAP now pushing that rally higher, almost 7%. So for some of these initial trades. To the downside, though, you're seeing Porsche down about 3.6% as well. So really a two-tail of German stocks that are then really showing up in the stock 600 as well. It is still that tech outperformance, the mega techs that are pushing the stock market higher. But I want to bring it back to that story here. This idea that the large caps in Europe may be leading when we see a broadening out in the States. Is that a problem? When do we see that expansion in the States show up in Europe?
Yeah, I think overall market participants would really like to see the overall broadening in participation. I mean, over the past few weeks, we've seen quite a few swings from large cap names outperforming, switching over to small cap. We are seeing markets move around a little bit there. And that's more because markets don't like uncertainty. And what's happening in politics at the moment is bringing that uncertainty to markets.
Is that something you trade, though? I mean, over and over again, so many people are saying, well, it's unclear what the policy agenda is. I'm uncertain how much clarity we get in the next 3 months. Does that mean not trading that or not trading the assumptions kind of leaves you out in the cold?
I mean, I believe that those short-term changes kind of give you opportunity sometimes, but we really do focus on that long-term fundamental picture rather than the volatility that you get through politics. So, you know, some players in the market may be able to take opportunity if they have the right liquidity and sizing to be able to do so, but we focus on more of that long-term fundamental picture.
We talked a bit about the SAP earnings this morning, Bailey, and I know Kriti was just mentioning, and there does seem to be talk, that's a story about AI and how they can bundle that into the cloud and sell that to customers. Interesting thinking about where AI goes and which sectors it goes into, because you have a preference for US healthcare. You've got you favour US healthcare, and to Kriti's point, a lot of people think that's about the politics, but actually you say it's about AI, it's about technology, it's about something bigger. Explain that a little more.
We try and look at healthcare on a beta-adjusted basis, so we are looking at the sector rather than its more kind of defensive profile. And we believe that the pandemic has helped to almost revolutionise the sector. We have seen drugs come through at a much faster pace. Regulation is starting to change. We have AI on top of that, so we believe that there's going to be more opportunity coming through there.
So that's the tech side of the story. Then if we're still talking about fundamentals, right here in Europe, it feels like the focus still needs to be on manufacturing, which remains fairly weak. You're seeing that in Germany, you're seeing that in France, arguably Italy as well. Spain has its own kind of weird outperformance story, so I'm not going to map that in. But the manufacturing story in Europe is weak, and I'm curious when that shows up in some of the fundamental underperformance, when on the equity market, on the bond market, we're still seeing green on the screen, France aside, on the bond market.
Yeah, I think the overall main picture there is that it will take a little bit of time for that to start to come through. Market participants are going to be keeping their eye on the data, as they have done for quite some time, and they're going to be quite data dependent. So that's something that we're going to be needing to watch going into the future.
Okay, Bailey, thank you very much. Bailey Wakefield, multi-asset portfolio manager at Aviva Investors. Thank you very much for joining us. It's an interesting session, isn't it, Kriti? When we look at what's going on these markets, we've got last week's story was all about rotation away from those large tech names, many of whom we're going to hear from shortly around earnings stories. So we could see another pivot in the story, and it was about piling into small caps. But the small caps, even that trailed off towards the end of last week. Yesterday, there was just enthusiasm for everything. Today looks quite mixed here in Europe.
Yeah, it is an interesting one, and this is why it comes right back to this idea of kind of small caps versus large caps, because you were talking about the breadth story as well. And then you look at some of the healthcare names, for example. When people look at an equity performance, Swiss equities come into play quite a bit. The Danish equities around like the likes of Novo Nordisk, Novartis, et cetera, keep coming into focus. I think that it means that we have to check in on the Guy Johnson Sensational Six, or the Kriti Gupta Core Six, if we will, because that, I think, really highlights the story that we are starting to see when we look at those heavyweights. Novo Nordisk, for example, outperforming higher by 0.5%. Schneider Electric, it looks like getting in on that AI theme that we saw in SAP as well. ASML, from an index point of view, is helping lift the index, but it isn't exactly driving the gains as perhaps it has in the past. Your underperformers, though, Ferrari down by just 0.1%, and Nestle.
It's interesting looking at the likes of Schneider Electric, because we've talked many times about that kind of business being a beneficiary of electrification. And we saw Goldman Sachs has put out an index of those companies that do well or that outperform under a Democratic presidency, and those that underperform. And yesterday we saw those that are set to outperform under the Democrats do well. And so it was a day where markets readjusted just at the margin, even if we didn't see big moves in the dollar or treasuries. They did adjust at the margin to slightly changing expectations around where we go. And this, I think we've got this Goldman Sachs basket. They don't tell us, interestingly, exactly what is in there, Kriti, but but it tells an interesting story.
It does on the stock front, even though on the FX front 24 hours ago on this very show, we were having a conversation around the FX front. You saw a bit into havens. You saw a move out of the yuan, a move out of the Mexican peso. So arguably FX is looking at a Trump trade, whereas the equity market may be looking at a little bit of a Kamala Harris trade. So that is your macro story. Let's get some of the individual stocks on the move. Lizzie Burden all over it this morning. Lizzie.
I just want to take us right back to tech, to AI, Kriti. SAP, you were talking about, and it's up 6.8% this morning off the back of those strong second quarter earnings boosted by AI demands. 25% up for cloud revenue, in line with estimates. So this is one of the stronger performers this morning. But if we flip over to Porsche, as I've told you, bad news on top of bad news for the car maker. We had its half-year results tomorrow, but yesterday we already had the news on its EV outlook, abandoning its sales ambitions there because of the lower than expected momentum for Europe and China. And then today announcing saying that they are seeing potentially a shortage of parts for aluminium because of flooding at one of their suppliers, and therefore cutting its full-year revenue forecast because of this shortage. So Porsche shares not liking it this morning, down nearly 7%. Also, let me take you to Julius Baer. We've had the news about the new CEO stepping in from Goldman Sachs. This is Stefan Bollinger. He's currently co-head of private wealth management for the EMEA region at Goldman. He's set to join in 2025, but it really illustrates this kind of strategy to move away from that Benko scandal and rekindle the company's growth ambitions. So good news for Julius Baer there. Just finally, let me take you on to Banco Sabadell. They also had their results this morning. Profit and net interest income beating estimates. You can see they're up this morning by 1.2%. It really does bolster the CEO's bid to avoid that hostile takeover. Our Spanish correspondent, Kriti Gupta, I know you were all over this, but it was, of course, that bid from BBVA, the Spanish rival, and the leadership looks to boost the share price to head off that bid, which, of course, it sees as undervaluing the firm. So good news for Sabadell this morning.
Lizzie, I'm so glad you brought up this story. You know I'm going to lean right into it, take any opportunity to comment, because one of the kind of pieces, one of the pieces of pushback in this deal from BBVA is that they just don't think it's they're worth what BBVA is offering them. And BBVA has been very vocal about saying this is as sweet as the offer gets. But one of the reasons Banco Sabadell is so confident in saying no is because of what Lizzie just outlined. The fact that they just see their stock price rising and rising and rising, and therefore adding more value than they claim BBVA can offer.
Yeah, it's the perennial question when you're the bid target.
Yeah.
Do you accept it, or can you do better on your own with your own management? You mentioned an offer we've seen in the cybersecurity space over in the United States, and their management again choosing to go it alone, thinking they can do better with an IPO.
Who says no to $23 billion? I've never had that offer come my way, but apparently they're saying the Wiz as well, the cybersecurity firm, can do better, and they can do better via the IPO market at a time when the IPO market isn't exactly roaring.
Yeah, it doesn't happen every Monday, especially with a lot of political uncertainty in the air. We will return to some of these corporate earnings stories shortly. Coming up on the programme, Porsche blames a shortage of aluminium parts and factory flooding for its cut to full-year revenue forecast. That is having an impact, a downward impact on the stock, down by 7.6% right now. We'll discuss that next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Q2, 20% of the deals customers paid directly for AI, and it influenced actually every single deal in Q2. Take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. We are actually also making sure that the AI Copilot can screen, millions of contracts. There is no data entry anymore into an SAP system. We expect actually a triple-digit million number of cost savings this year.
The SAP CEO, Christian Klein, there speaking to our very own Tom McKenzie earlier on Bloomberg Television. It's interesting that he's talking about that ripple effect that you're seeing. It's not just about AI. It's about things like even ExxonMobil hopping into renewables has that AI read-through in it, moving the shares by over 6%. Not the Exxon-specific story, but the fact that SAP is talking about 25% of a rise in revenue just on the AI demand. Just when we thought, Anna, that we were running a little bit out of that steam on the AI story, SAP proves us wrong. How much of this is a microcosm for Alphabet later today?
Right, well, we're looking for areas where AI goes next, aren't we? We all know about the NVIDIA trade. Everybody knows about the NVIDIA trade. So looking for evidence of which other parts of tech it goes to, which other businesses it goes to. We're getting a sense of that from SAP, perhaps. A good morning for SAP, then. Not such a good morning for Porsche. It's in the red this morning after the German car maker had to cut its full-year revenue forecast, saying a shortage of aluminium parts could cause it to stop production of some models. Let's get more. Bloomberg's Craig Trudell joins us this morning. Craig, good morning to you. I have it on good authority. The one analyst this morning said, when it rains, it pours, and it's that kind of moment for Porsche. This in connection with flooding at one of its suppliers.
Yeah, this is likely a supplier called Constellium. That we haven't heard from Porsche itself citing that company, but we do know that they have referred recently to the fact that flooding has disrupted their production. And in the case of a company like Porsche, your volumes are smaller. You likely have a bit of a narrower supply chain, where a company like Volkswagen or Stellantis would be, have multiple suppliers of particular parts. It may be the case that a disruption at one supplier could significantly impact their production and therefore have a more significant, impact to their earnings. That being said, this is also a company that I think, as was alluded to before the last break, has had serious issues in China, and that's, this is very much a rains it pours moment for them.
Well, speaking of China, let's talk about the biggest EV player in China, and BYD in particular. Warren Buffett's Berkshire Hathaway pulling back out of their stake in BYD. Can you explain the logic there? Why now? How much?
I mean, this was a hugely successful bet for Berkshire. I mean, there's a lot of positive stories over the years of them picking the right name at the right time. BYD, they absolutely put that company on the map. I don't think people knew what BYD was. It was interestingly a company that was supplying batteries to phone companies, the Nokias of the world back in the day. Berkshire Hathaway, it was a massively successful bet. It's been, they've been taking profit, and they've taken an awful lot of profit, because this is a case where, the stake was above 20%, is now below 5%. So we'll actually get a little bit less of a sense of just how much more Berkshire sells to the extent they want to continue to take money off the table here.
You know what's so fascinating is every time I hear BYD, I'm reminded of an interview that Elon Musk did with Betty Liu way back in the day on Bloomberg TV, where Betty asked him, what do you make of BYD? And he laughed it off as not a threat. Years later, Lizzie, we're not talking about Tesla losing, I believe, less than 50% of market share in the States now. BYD's only getting bigger, to Craig's point.
Yeah, don't underestimate BYD. I just want to bring it back, though, to, you've had this pessimism on EV sales that you highlight from Porsche. Tesla going to give its outlook later. What are we going to look out for in these earnings after the close?
Yeah, I mean, I think, going back to the earlier discussion of, the NVIDIA trade and SAP, I think Elon Musk is really trying to make Tesla, the AI company to bet on. This is not a sort of Johnny-come-lately story. He's been talking about AI for a long time. He's been, making predictions about self-driving cars. Those have not panned out, as we know. That being said, he's been hugely successful in, turning the stock around. This was a stock that was down more than 40% at one point this year, has come all the way back. It's now back into positive territory. And that's despite the fact that the underlying fundamentals of this company have continued to deteriorate. So earnings and revenue are not expected to be particularly strong. We do expect actually decline in both earnings and sales. That being said, he has very much changed the narrative and the point of emphasis for the company.
Robo-taxis, Craig, you mentioned them. Let's go there. I mean, is this what drives and excites Tesla investors these days? I was reading something about grades of autonomous and the extent to which these robo-taxis will be autonomous. I didn't feel like that would be something that would need to be on a continuum, but apparently it is.
It is, and it's also the subject of great debate, whether or not the sort of nuances are captured there. So a lot of us, automotive nerds very much enjoy, the metrics of this. Yes. That being said, I mean, I do think the robo-taxi event that was scheduled for August, Bloomberg reported this month that it will be postponed. Just last week, Elon Musk did confirm that he had given the teams working on the prototypes, and I should emphasize prototypes here, do need more time, that he asked for a change to the front end of them. I do think that, one of the big questions here is just how close we are to these really actually being ready for the road. And also, how ready are they? Are they going to be, ready for sort of generalized autonomy where they can go anywhere, do anything? As we're alluding to here, the sort of, levels of automation, that is a huge distinction and has been something where Musk has very much, carved out a position very different from the rest of the auto world, where everybody else, to the extent they want to put fully driverless cars on the road, they confine them to a designated area. Musk has said, we won't have to do that. We'll be able to do generalized autonomy. And I think there's a lot of skepticism that he'll be able to deliver on that.
Craig, I feel like I'm in a sci-fi movie this morning. We're talking about AI. We're talking about robo-taxis. I feel like I should also lean in. Yeah, and we've got the space set as well. We should talk about humanoids as well. This has come up quite a bit with Tesla, talking about making this in limited production internally. It's also, explain this to me, because it's supposed to help with car manufacturing, but also not. Yeah. Tell me about humanoids, Craig.
Yeah, Optimus is the name of the robot within Tesla. Interestingly, just in the last couple of years, they had a human in a robot suit, performing for a quote-unquote reveal. They have made some serious progress there to where they've filmed some stunt videos, but I think there are some real questions as to, again, market readiness. And I think Musk himself has alluded to the idea of, for the time being, we will put these to use in sort of limited fashion within our own facilities. He's talked about them sort of, traversing the halls of Tesla's offices at this point. Whether or not they're going to be, ready for Tesla to actually sell is an open question, but that hasn't stopped him from...
That's a lot of projects.
Yes, and that hasn't stopped him from really throwing out some crazy off-the-wall numbers at the annual meeting in the last few weeks about the potential of where this business will go.
Well, it's interesting. There's a lot of products, but it feels like these are all legs for Tesla stock to continue to rise. Craig, we have to leave it there. Bloomberg's Craig Trudell, we thank you so much for walking us through a little bit of everything. I don't even know how to wrap that. We thank you so much. Coming up on the program, we're going to stick with the automotive space, or at least the transportation space, I think is a better way to put it. We're back at Farnborough Airspace. Guy has an interview with the CEO of one of Europe's biggest plane makers. That coming up next. This is Bloomberg.
actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? I mean, like, what's that about?
We're not forcing everybody to, be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Or other authorities.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to the opening trade, 30 minutes into our trading day, and this is the picture we have for you across European equity markets. The Stoxx 600 down 0.1% or so. The FTSE 100 really underperforming. We've got some weakness coming through in some basic resources stocks this morning as a result of some weaker metals prices, and so that's part of the reason there. The DAX actually benefiting from SAP going higher. The other story out of Germany is Porsche, of course, under pressure, cutting its sales guidance, but SAP is the source of the green today. AI boosting its cloud sales, and that seems to be something that lifts that particular business. You can see Glencore in the red, Norsk Hydro also in the red after that business disappointed with its earnings. Let's move on to the aviation sector. Delta Airlines says it expects to cancel more flights this week as it tries to recover from a crippling technology outage. Delta cancelled more than 800 takeoffs yesterday, bringing its total since Friday's meltdown to more than 4,600. Other airlines have got operations back on track more quickly, but the chaos has highlighted vulnerabilities in the sector. Let's go back to Bloomberg's Guy Johnson, who's at the Farnborough International Air Show with an important guest on the aviation sector. Guy.
Good morning, Anna. Yeah, welcome to a blustery Farnborough here in Hampshire. The rain hasn't arrived, which is good, because we're standing outside Guillaume Faury. He is the CEO of Airbus. Guillaume, always a pleasure.
My pleasure,
for joining us this morning. Look, this is an air show. Normally, you and I spend our time in these conversations talking about the big orders you've managed to achieve. Where are they this time? This feels like a quiet show.
It's a quiet show in terms of orders, but as you know, we have large backlogs, and we have by far more demand than supply. So the challenge for us is being able to ramp up, to produce, to deliver, and there's a lot of conversations around those themes.
How frustrated are your customers about where we are right now? Kind of, what are they telling you? What are those conversations behind the closed doors looking like at the moment?
Well, it's not behind closed doors. I think they're quite vocal on the fact that they need the planes. They need us to do the ramp up, to deliver our planes. They have a strong demand. So it's a quite unique situation for them, and we are not completely able to satisfy their expectations. So that's the priority for us. Work with the supply chain. Find the ways to debottleneck the places where we have difficulties. It's here and there, and that's something that takes a lot of time, a lot of energy, but we're moving forward. We are ramping up, not exactly at the pace we wanted, but not far from.
I was talking to Tim Clark yesterday of Emirates. Tim Clark, he was struggling to understand why this industry is still not able to manage its supply chain story. you get a couple of years after the pandemic has passed, but actually, why are we still here? Why are we still in the situation where the supply chain is causing the issues? What is it unique about this sector that is causing this to happen?
Yeah, I think it's important to remember what happened during the pandemic. We had to reduce very significantly the production rates, and part of the supply chain was idle for 1, 2, 3 years sometimes. Then restarting this supply chain post-pandemic and going from a rather low level of production to a much higher in a short period of time is difficult. A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources, train the people, educate them, qualify them on the job. At times of inflation,
so it's still a people issue. It's not. That's where the problem largely.
There are multiple problems, but I think bottom line it's about onboarding people, training them, and ramping up the quality, the safety, and the quantity of what we're doing at the same time. And that takes time. We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
How much longer does it last for?
It will last for a few years because we are in this ramp-up. So we are trying to find a good balance between the very strong demand and the ability of the supply chain to do the ramp-up. So we're pulling as much as we can, but we have to be reasonable on what we do and adapt to the up and downs that we're seeing in the supply chain. That's what we're doing.
Porsche this morning flagging shortages of aluminium. You've not got shortages. You talk about the labour. There's not shortages elsewhere. You're not short of materials. You're not short of...
We had earlier last year and the year before issues with... raw material, that was more steel for our industry last year. On aluminium, we've been okay. I'm not aware of any shortage of aluminium for aerospace at the moment, but we have to monitor those kind of things. It's not just aerospace that is ramping up. We have other industrial sectors and sometimes ramping up a certain mix of raw material, of activities, of equipment. We had 2 years ago the crisis on the microchips that was resolved 2 years ago. So it's a very dynamic environment. It's volatile, a lot of changes, international disruptions, and we have to navigate those challenges.
You talk about the strong demand that your customers are seeing right now. We're starting to see signs of that demand beginning to slow down a little bit, particularly in the short-haul market. You're seeing it in the United States. Ryanair yesterday out signalling it here in Europe as well. You've been pushing your narrow-body fleet to a position where you think you'll be able to produce 75 aircraft a month. Is 75 going to be necessary? If demand slows down more significantly, do you think you're actually going to need to get there?
Yeah, for us, the need to go to 75 remains. We have by far more demand than our ability to supply on our single aisle. So if there is a bit of softening of the market, that's no problem for us. We will be able to advance a bit of the planes that are on demand. Today we have to refuse orders because we are not able to deliver in the time frame that is requested. So we feel rather protected, if I may say so, from those up and downs of the market.
In terms of that narrow body, the A320 family, you've brought here to Farnborough the XLR, just been certified, huge step forward for the company to be able to signal that kind of box has been ticked. What next for that family? This is the core of the global aviation sector. What comes next for that sector? Are you going to change the wings on the aircraft, make it more efficient? Are there incremental changes you can make to that family?
I like your impatience, Guy. But when it comes to the A320 family, we have a new member in the family that is the A321 XLR, as you said, and that brings us close to the wide-body business. It opens a lot of new possibilities for airlines, and the challenge for us now is not very much on the product, it's on the ramp-up of the production system. That's why we are building additional final assembly lines. We are transforming the production system from A320 to full A321. We will have 10 final assembly lines for the product around the world, 2 in the US, 6 in Europe, 2 in China. So that's what's next on the agenda for us. It's really ramping up the production system and delivering those planes.
I've been asking this question for the last few years, but I actually feel now we're at the point where we might need an answer soon. And that is, when does the 320 family life cycle come to an end? When do you think you have to make a decision if you're going to get the next generation, the much more fuel-efficient next generation of narrow bodies into the air by, let's say, mid-2030s? When do you need to make that decision?
So actually, we're really in that phase of developing the technologies for the next generation, the product that will replace the A320 family. We want to be able to make the decision by the end of this decade for an entry into service of the successor in the second half of the next decade.
Right.
That's the time frame.
So by the end of this decade, you have to make that decision. By 2020,
we want to be in a position to make that decision. Then we will adapt with the situation, with the environment at this very moment. But as you know, we're committed to decarbonization of the sector. We want to be carbon neutral by 2050, and we believe that the successor of the A320 is a very important piece to that puzzle. So we really want to be in a position to make the decision by the end of this decade.
You mentioned the assembly lines you have in the United States. Do those assembly lines insulate Airbus from a second Trump presidency, do you think? There's already talk of significant tariffs.
We are a big manufacturer in the US that plays a big role in the equation. We have one assembly line for the A320. We have an assembly line for the A220 in the US, in Alabama, in Mobile, Alabama. And we're building a second assembly line for the A320. So we are a large manufacturer of commercial airplanes in the US, and indeed that plays a big role in the equation.
What about what is happening in France right now? How much concern does that give you? The political story in Paris is chaotic, and we're all trying to understand what the implications are for France, not but just for France, but also for the whole of the European Union. The whole of Europe is going to be affected by what happens in France.
It's important for us to have visibility, to have predictability, to be able to have the main countries of Europe working together in our activities, defense, space. These are sovereign activities for Europe. And indeed, we don't like uncertainty, and what's happening in France at the moment is a bit of a concern. So we are
a bit of a concern.
We are expecting government clarity and a way forward as soon as possible.
But is this are you directly impacted, or is this? Do you expect any direct impact? I.e., new French government talks about Airbus, changes the way that Airbus can operate in France, or is it just a uncertainty at the core of Europe means that there's less decision-making, less quick decision-making in terms of kind of how the industrial story develops on this side of the Atlantic?
There's no direct impact for us, but it's more of the latter, meaning we need the ability to have political decisions, to have a political environment that is able to navigate the challenges that the region has. So it's nothing direct, but more indirect impact for us.
In terms of where we are with the economy right now, some data seeming to suggest that we are seeing a slowdown. We referenced earlier on what was happening with the slowdown that some of the narrow-body carriers, the Ryanairs of this world, are seeing. What do you see in terms of demand going forward? Does it remain as strong as it is right now? Do you see an economic slowdown coming in our future? Europe is kind of growing slowly at the moment. There's signs maybe of a slowdown in the United States. What is your estimate of kind of what the economic picture looks like right now?
We don't see a slowdown in the demand for commercial airplanes.
Yeah.
There's maybe a bit of softening of the acceleration of the pace, but it's increasingly important. We see that the estimation for the forecast for the fleet is again a doubling in the next 15 to 20 years. So the demand around the world for flight is really increasing, and that's what we're serving. So we don't see it as a recession.
Yeah,
it continues to be an increase.
Well, that takes me on beautifully to my final question, which is: you talk about a doubling, you talk about this huge amount of demand, you talk about this insatiable appetite for aircraft. Does the infrastructure exist to provide that? Does the fuel infrastructure exist? Will it exist to provide that? Europe is struggling this summer with ATC issues, with airport issues. We can build lots of aeroplanes, but are we building the kit that serves the aeroplanes, the fuel that fuels the aeroplanes? And I'm just wondering whether or not there are now limiting factors beginning to creep into the market, which may subdue the demand that you're talking about.
Well, there's always some local situation here and there, but globally the aviation system is growing. It continues to grow fast. Aviation is an industry where you don't need a lot of infrastructure to provide the service. You need an airport at the takeoff, at the departure, and an airport at the arrival.
But you need air traffic control in the middle, and you need fuel to put those...
Which we have. So we are very far from having saturated the skies. Even in Europe here, you see the sky is empty. So there's plenty of room to grow.
Quite close by.
And the infrastructure is the air. So we are benefiting from a natural infrastructure that is there, which is not the case for other means of transport. So we are just at the beginning of aviation. We need to get organized, and of course there are bottlenecks here and there in the growth, but there's still a lot of potential for growth.
Guillaume, great to see you. Thank you very much indeed for stopping by to see us.
My pleasure.
Here at Farnborough. Thank you very much. Guillaume Faury, the CEO of Airbus. Guys in the studio, in the warm studio, back to you.
We have very little sympathy for you, bringing us that, of course, that interview with Airbus. Bloomberg's Guy Johnson of the Farnborough International Air Show. We thank you so much. Coming up on the program, as support builds for her Democratic Party's presidential nomination, we'll take a look at Kamala Harris's possible energy policies. More on that conversation next. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Think about takebacks. I was told I was going to get to debate Kamala Harris, and now President Trump's going to get to debate her. I'm kind of pissed off about that, if I'm being honest with you.
So Kamala Harris and J.D. Vance there on the twists and turns of the U.S. election. But let's have a little think about what a President Harris would look like if she makes it to the White House. As California Attorney General, she brought lawsuits against fossil fuel companies. She prosecuted a pipeline company over an oil leak and investigated ExxonMobil for misleading the public about climate change. So how would the U.S. Vice President and likely Democrat nominee find a balance between the energy industry and climate activists? Let's go to Bloomberg's Stephen Stopczynski for analysis. Stephen, she's said to be a tougher oil industry opponent than both Trump and Biden. What sort of policies could we expect from her on the oil and gas sector then?
I think largely you're going to see her supporting what Biden has kind of pushed forward. And he's been sort of soft on oil and gas. He didn't follow through with a ban on oil and gas drilling on public land like he said he would. But that being said, if you look at what Kamala Harris has actually proposed during her campaign in 2019, she was actually pretty strict on oil and gas, one of which was a ban on fracking. That's a popular way of drilling for shale oil and gas in the United States. Now, will she actually follow through with a ban if she's nominated and becomes president? It's quite unlikely, but it does show that she is on the stricter side of things. Biden, for example, had never proposed a ban on fracking. As well, Kamala Harris has been somewhat opposed to offshore drilling as well. So that could be another area that she's a bit stricter. But in general, will also be holding big oil companies accountable. As you listed off at the beginning of the segment, she's been quite strict as Attorney General in California. She was quite strict and hard on these oil and gas companies. So she's not going to let them get away with breaking any environmental rules or anything like that. And lastly, Biden put a pause on new developments of liquefied natural gas export facilities. It has widely been viewed that come January next year, that would largely be removed and projects could move forward. But will Harris as well potentially look to expand that? Because LNG development has been shown to release methane emissions during the production of shale gas or transportation and liquefaction and transport of LNG. So is that something that a potential Harris administration would like to look stricter at? That's another area that could differ a little bit from the Biden administration.
And so, Stephen, where does all of that leave oil and gas producers? I was looking back, courtesy of some of the comments on the Markets Live blog, looking back at the first Trump presidency, and it was interesting to see that, yes, that the production stateside of energy products and the drill, baby, drill mantra was real. But actually, we saw downward pressure on prices, perhaps as a result, perhaps not. And this in the pre-COVID period I'm talking about. So how is the sector bracing for this, for what could be some political change or might not be?
Yeah, I mean, I thought what was interesting is, there was certainly a drill, baby, drill chant during the Republican convention led by Trump. And that's not really the view in Houston or with shale drillers in the United States. They're more like, how can we get the most shareholder value possible without having to spend more on drilling, because they're looking at efficiencies as opposed to drilling more. Already, U.S. oil and gas production is at a record high under the Biden administration. It's gone up during every administration over the last 3 administrations. And that's likely going to be something that continues in the future unless there are harsher rules. But the view on really increasing output more than we are right now is not in the place. Oil prices aren't in a comfortable enough place for shale drillers to really look to expand production. Demand in the United States domestically has sort of lagged, as well as abroad. Chinese demand isn't living up to where folks thought they would be this year, especially in the post-COVID world. So it's unclear whether that drill, baby, drill will be embraced by the industry under a Trump presidency.
We should point out as well that, and I think for international audiences, it's important that so much of the South's GDP comes from the oil industry as well. Bloomberg Stephen Stepinski, we thank you so much for bringing us that crucial context there. Part of that conversation in terms of energy policy and arguably climate policy as well is still drilled into, well, pun excluded. I didn't mean to do that. But it's so drilled into the climate change conversation as well, and some sort of admittance of whether or not that really is a part of not only the environmental narrative, but the investment narrative as well. We have the perfect guest to talk about it. Tanya Rosh, joins us this morning. She's the head of Cap On Portfolio Management over at 12 Capital. Tanya, a pleasure to have you on the program. Look, we're talking about this kind of climate policy for a very long time. We're also talking about hurricane season. It feels like, again, pardon the pun, I really don't mean to do this, but the perfect storm for your part of the markets. Walk us through what you're seeing and the trends you're seeing, at least for the month of August, as you balance the politics and the environment.
Yes, absolutely. So we see in the eye, so to speak, of the hurricane. So it's a very active season ahead. There's really largely a consensus in the community of the public institutions, the private institutions, but also universities, in terms of what they forecast for this season. And it's going to be a very active season, the US Atlantic hurricane season. So what you usually have is around 6-7 hurricanes, but we have a forecast of 11. So that's quite, well, not double, but almost double. And also the accumulated cyclone energy, so that's a measure of the energy that's just around in the water and in the atmosphere, that is also almost double than what we usually see. So that's on the horizon. And what does it mean for like our asset class? So in insurance-linked strategies, we basically do reinsurance in a securitized format for investors. So this is, of course, very important if we go into a season with a lot of potential for catastrophic losses. But it's very, very important to note that it takes much more than a season forecast for a season to actually have impact. So you need a storm to actually do a landfall, and we're talking the US landfall here, because that's where really all the values are, the insured values. And that landfall needs to be in an area that also needs to be populated. So there's a lot of conditions for it to really make an impact.
Well, quite, because I'm looking backwards now. The whole of Jamaica was declared a disaster area when Beryl hit, and yet cat bond investors weren't called on to cover any of the costs because the air pressure required for a payout wasn't reached. You also didn't have cat bonds triggered for the storms in Mexico and Texas. I just wonder how ethics factor into the criteria around these bonds, whether the thresholds are actually appropriate.
Yeah, that's a very good question, and definitely one that's being a lot in the discussion. It's not that there were no insurance payout, it's just that it was not going as high for a cat bond to trigger. So you actually had the Caribbean, the CRIF facility paying out. There was a parametric cover for Jamaica because of the heavy rain of the precipitation. So there were some payouts. But in the cat bond market, we really only covered the most severe events, very, very, very high up. So it's basically, you could say, the last layers where something triggers. So it was, simply to speak, just not severe enough to go into the cat bond market.
And Tanya, do you expect the sector to continue to deliver, with that in mind, deliver yields well above many other asset classes? That's why they're proving increasingly popular.
Yeah, I mean, we would expect that. Obviously, we also don't have a crystal ball. We don't know what the season brings if there's a very, very severe event. But the supply and demand dynamics have been very beneficial for investors. So we see a lot of demand for cat bonds, for cat bond coverage from the industry. So a lot of cat bonds coming to the market, new sponsors, even new coverages. Thinking about that cyber part of the market that's growing. But the capacity to take on that risk, that has grown with much less speed. So that's always beneficial, and we would expect the trend to continue and to really deliver these nice spreads. If nothing happens in terms of catastrophe-wise, that could get a little bit back, so kind of normalize, but it would still be on historically very attractive highs.
Tanya, thank you so much. Thanks for joining us. Tanya Roche, Head of Cat Bond Portfolio Management at 12 Capital. Really interesting conversation and some quite eye-watering yields in that sector. So interesting to get her perspective on whether that continues.
Yeah.
European stocks then on the back foot this morning, in particular in London, and US futures pointing a little bit lower after the gains of yesterday.
Yeah, and you're starting to see even those gains that you saw in the Eurostoxx 50 that were coming in kind of green on the screen, paring back a lot of those gains, despite the fact that we had a pretty good earnings story coming out of SAP. Porsche, of course, dragging the market lower among some of the other healthcare stocks as well. Does that set up a little bit of a microcosm for Tesla and Alphabet later in the U.S. session as well? They will both be reporting after the bell. In the meantime, quick check on the currency market as well. You've got euro dollar hovering around a 108.78, cable at 129.18. That does it for the opening trade. You've got me up for the pulse next. More ahead. This is Bloomberg.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Kamala Harris faces a make-or-break week as she remains on track to becoming the presumptive Democratic nominee. In the corporate space, it's a tale of two German companies, SAP rallying on AI demand, while Porsche tumbling on an outlook cut. Now the focus on American tech earnings as traders look to Tesla and Alphabet to keep up the momentum. Lots going on. Let's take a quick look at the European markets map. You are seeing, well, a little bit of a pullback in some of the markets. That was green on the screen just 30 minutes ago, paring back a lot of those early opening gains. When you look at the cross-asset picture, you are seeing futures over in the States following that same trend. A little bit of weakness over in the States as well. You are seeing it down by 0.3%. Euro dollar 108.76. Cable at 129.18. Even copper in on that risk decline. Lots to digest. Let's dive in. Let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Let's get to our top story here. U.S. Vice President Kamala Harris has secured enough pledged delegates to clinch the Democratic presidential nomination, at least according to a survey by the Associated Press. Harris says she does intend to unite the nation and win November's election.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
The name has changed at the top of the ticket, but the mission hasn't changed at all. And by the way, I'm not going anywhere. I'm going to be out there in the campaign with her, with Kamala. I'm going to be working like hell, both as a sitting president, getting legislation passed, as well as in campaigning.
A lot to digest. There's some real messages of support coming from Joe Biden for his VP and the potential presidential nominee from the Democratic side. Let's get more from Bloomberg's Vonnie Quinn standing by for us in Washington, D.C. Vonnie, walk us through the process here. Is it fair to call her the presumptive nominee?
Yes, now it is actually, Kriti. I mean, anything can happen between now and the convention, obviously, and things tend to happen. But as of right now, if no challenger emerges, she is the presumptive nominee. This after she got more than 1,976, which was putting her into the majority of delegates. Much more than that now, according to AP and our sourcing as well. And you could see that today, that's yesterday, your time. So on Sunday, she basically gave a speech to her staffers from what is now the Kamala HQ. It had been the Biden HQ, and she's rebranded herself as Kamala. She wants to get out there and have the electorate get to know her a little bit better. They hadn't had that kind of chance while she was vice president. To that end, she's beginning to start her campaign. Tomorrow, she will be in Milwaukee, a crucial swing state, Wisconsin. She needs to start making inroads and getting the progressive and moderates behind her now that she has the Democratic Party completely unified behind her. She also, of course, needs to have a vice presidential pick before the DNC, beginning of August 19th and running through that week. Still a lot of candidates on that list. They're right now being vetted by the FBI, and at some point we'll know who that will be. Several governors still in the mix of swing states. It's not quite clear whether she will go for somebody who might be able to swing a state for her, or whether she will take personal relationships into account, or how that process will work, but we'll definitely hear about it.
It's interesting that you mentioned kind of where that strategy lies. You have names like Andy Beshear, for example, out of Kentucky. You have the names of Mark Kelly out of Arizona, Roy Cooper out of North Carolina. There's plenty to pick from. We'll see how she handles that. One that's part of her election strategy. But speaking of election strategy, let's talk about the Trump side. What can we expect to hear from the GOP campaign there, especially when it comes to winning over the very electorate you're talking about?
Exactly. Well, we're already starting to hear it, Critty. We had the super PAC that is attached to President Trump already out with an ad calling her Joe Biden 2.0. She'll be ready for this. She knows that there are flashpoints, and one of them is the economy, one of them is inflation, obviously, and the border is a huge one as well. They had taken to calling her the border czar, Biden's border czar, which isn't true in the slightest. So she will be ready for attacks on the economy and immigration. The Biden administration hadn't done a great job messaging that the economy was improving and that inflation was coming down, and there is hurt across the country. On the other hand, look for her to go on the attack as well. She already did that in Sunday's address a little bit to her staffers. She already talked about her past as a prosecutor. Now, that wasn't something she would have played up 4 years ago when she was running as Joe Biden's running mate, because back then a law and order candidate wasn't particularly what the more liberal parts of the electorate were looking for. Now, though, it's a different moment in time, and she can play that up, and she is playing it up. In fact, she said today that in her past as Attorney General in California, and before that a prosecutor, she had prosecuted fraudsters, cheaters, and predators, and she said, so hear me when I say I know Donald Trump's type. She is going to go on the attack. Yeah. She can also use the age gap to her advantage, where obviously that couldn't have happened before Biden pulled out.
It's certainly something she's leaning into. We've talked about it in the previous hours of programming, Bonnie, about how she's leaning into things like the meme crowd, for example, to really highlight that demographic difference. We should also mention she's talking about and accusing President Trump of being part of that Project 2025 agenda, which President Trump, the former President Trump himself, has really distanced himself from, despite, of course, choosing J.D. Vance as his running mate. Lots to digest out of Washington. Lucky for us, we have Vonnie Quinn on standby, who will be joining us throughout the week. We thank you so much for that crucial context. Sticking with D.C., a U.S. House committee has called on the CEO of CrowdStrike, George Kurtz, to testify on a defective software update that caused widespread global outages. Congressional committees have the power to compel testimony by issuing subpoenas, by usually first asking witnesses to appear voluntarily. And sticking with the airline space, Delta Airlines says it expects to cancel more flights this week as it tries to recover from that very crippling technology outage. Delta canceling more than 800 takeoffs yesterday, bringing its total since Friday's meltdown to over 4,600. Now, more than half the airline's worldwide IT relies on Microsoft Windows operating systems that was affected by the software error. Now, I want to bring in Bloomberg's Guy Johnson, who, of course, is with us from the Farnborough International Air Show, where he just interviewed the Airbus CEO, talking about supply chain issues plaguing the industry, and that could last for a few more years.
But I think bottom line, it's about onboarding people, training them, and ramping up the quality, the safety, and the quantity of what we're doing at the same time. And that takes time. We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody. And that's what we've been facing earlier this year.
Well, the man himself joins me now, Guy Johnson. Guy, walk us through what we're starting to see in the demand space.
So we're starting to see a slowdown, potentially. You're starting to see that here in Europe. You've already seen evidence of that over in the United States. We saw Ryanair out with its numbers yesterday. Critty, you tracked that one pretty carefully. We're seeing it over in the US, though, particularly at the kind of the low-cost end of the market. So we are starting to see a slowdown already. Guillaume Faury telling me very, very clearly, though, that he doesn't think that that will mean a slowdown in aircraft production at the moment. It's not a demand-limited market, it is a supply-limited market. They're still struggling to deal with the supply chain issues that he was referencing just there. That's not going away anytime soon. So there's a slowdown in demand. It's unlikely to ripple into the OEMs, the Airbuses and the Boeings. They're likely to continue to try and make as many aircraft as they can. Airbus obviously in a very different position to Boeing right now, which has been heavily limited by the investigations and the limits that the authorities in the States are putting on its production facilities. So Airbus in some ways is having to throttle back because of production limitations. But Faury's saying very clearly, if there's a slowdown in demand, that's just going to mean that actually maybe we can catch up a little bit.
Well, speaking of catching up, let's talk about new designs, new innovation coming out of Airbus. What do we know on that front?
So at the moment, we've probably reached or are reaching the limits, Critty, of the current versions of the narrow bodies we have, the single-aisle aeroplanes that we all spend so much time on. You've got the 737 MAX. We all know that that's obviously probably reached the end of its life with the 737 program, which has been around for so long. The A320 family. Now, Airbus have brought here their latest version of that aircraft, which is the XLR, the extra long-range version, which can basically kind of fly around the world as a single aisle. But they're reaching the limits now, so there may be some incremental changes. But if you want to see the next generation of aircraft, the next plane that is going to make the step change in terms of the environmental standards that this industry, the customers now require, at some point soon, you're going to have to make a decision. Now, Airbus is going to be in a much better place to make that decision from a financial point of view than Boeing is, but it's about the technology and whether that technology is there yet to be able to sort of drive that next aircraft type coming through. But he's basically signaling that that's likely to come at the end of this decade, that decision. That is a huge financially huge consequential decision for this company to make. It's a kind of make or break moment, and it's going to come at the end of this decade, and it's going to be fascinating to see how Airbus and Boeing compete for that market, because if Airbus can get there first, that is a huge potential advantage for them. When does Boeing get there is going to be an open question at the moment, but he's now saying that decision, that massive financial decision, probably has to come at the end of this decade, Chrissy.
Some really interesting timing, of course, as they're all kind of juggling the geopolitics from around the world. Bloomberg's Guy Johnson, live at the Farnborough International Air Show. We thank you so much for bringing us that crucial context. And speaking of, we should talk about these markets as well, because you are seeing a real risk reversal when it comes to the equity markets in the region. The Stock 600 is substantially lower. A lot of the declines are fairly broad, despite the gains you're seeing in the likes of SAP. We have a lot more to digest in terms of what's moving the financial markets. We're going to dive into them right after this break. Stick with us. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There's a lot going on in these markets. There's a lot going on in these geopolitics. So how do you position for it if you're looking on the outside in for the kind of chaos over in the U.S. political scene, the monetary policy picture on both sides of the Atlantic that isn't very clear, and some really interesting economic dynamics that are emerging in Europe as well, from manufacturing weakness in Germany to, of course, the geopolitics as well in France, not to mention what's going on in the broader European Union. To kind of mesh all the idea for a international portfolio, we have the perfect guest. Claudia Panseri, Chief Investment Officer for Wealth Management for UBS in France, joins me this morning. Claudia, an absolute pleasure to have you on the program, and really lucky timing because maybe you can help us make sense of the chaos in the news flow. I'm curious what the best kind of hints you're getting in terms of positioning here. Do you pay attention to what's going on in the States? Do you Trump-proof a portfolio versus looking at perhaps monetary policy as the primary driver right now? What is top of mind for you?
Good morning, and thank you for having me, and hopefully I can bring some answer to a different question. I think it's very interesting period. I mean, we have seen a lot of volatility in Europe just a few weeks ago, and now you see market moving back again and performing quite well over last week. I think geopolitics and politics overall has always a limited impact on markets. They can increase volatility in a very short period of time, but at the end, what matters is economy, inflation, interest rate, and earnings growth. So clearly, even if the market is now focusing on the election and all potential Trump trade or re-widening Trump trade, what is really important at the end is where the economy is going. So in this election, what matters is the impact of a fiscal policy for instant growth, or tariff on relationship with China, and what does it mean, for instance, for production. I think we need to make a step back and think which are the consequences of the politics rather than politics itself.
Do you think it's too early to price in a Trump trade? And Claudia, the reason I ask this is just because in the last 24 hours, we've seen some really interesting market dynamics. We've seen strength in the Japanese yen, the Swiss franc, arguably the dollar as well, against the yuan, against the Mexican peso. That, to me, on an FX front, screams Trump trade. But then you look at the equity market, and you're actually seeing much more of a rotation to what some would call Democratic-friendly kind of sectors off of that Kamala Harris story. Who has it right? Is it the stock market? Is it the FX market? How do you think about that?
I really think that the Democrats are back running, so the probability to have Trump in power is still very high. But there are more, let's say, more volatility around the outcome of the Congress. So many people who are expecting the Congress to be Republicans with Trump running the presidential election. I think now the probability of having a Congress and having a red suite is lower than before. This does not mean that the market should be under pressure. Be careful, because Kamala Harris, if is nominated, then she will bring the same policy and the same support that we have seen over the last years. So I really think if the market is selling off heavily, should be a buy opportunity, because the earnings season starts very well. The Fed should start a cutting rate in September, and the economy is not in recession. So I think the market is just taking a step back, putting Democrats on the running stage as well. But it doesn't mean that the market should be under pressure. I think the underlying story is very well oriented for U.S. stocks.
Well, it's interesting that we're kind of trying to piece together the policy agenda of both candidates in terms of that, because both candidates have to deal with one very important deadline coming up in January of 2025, and that is the debt ceiling at the end of the day. We talk a lot about it in Europe, and I want to get your insights, and we'll do that in a moment there. But I'm curious about what the bond market positioning should be going into, one, an election where both candidates are expected to continue and be faced with public finances in the states that aren't necessarily slowing down. How do you position for that, the very first thing on the president's agenda, whoever that may be, on January 2025?
Yeah, this is a very good question. I think the bond market, we need to be very careful in the sense that you may have some premium on the long end of the yield curve, so you may probably have some volatility on maturity and duration above 7-8 years. So the best is to stay invested in high-quality bonds, but with a tenor which is around 4 or 5 years, not more. Because the 4 or 5 years tenors then is more linked to monetary policy than the fiscal policy. The fiscal policy always past the long end of the yield curve. So for instance, 1, 2, 3, 4, 5 years max of tenor, that would be the best way to be positioned on the fixed income for the coming 6 months. Of course, if we have a solution the debt, we don't see a huge amount of debt spending, and the market and the Fed start cutting, then we can increase the duration. But for the time being, I think, say around 4 or 5 years is the best place to be on the yield curve in U.S.
Oh, it's fascinating, especially when you have that positioning around the deficit story. I'm having a little bit of deja vu because we keep talking about the positioning around the French deficit story as well. Claudia Panseri, don't go anywhere. We got to still get your take on Europe as well. UBS's wealth management CIO in France is sticking with us. Plenty more ahead. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the Welcome back to The Pulse. I'm Kriti Gupta in London. Emmanuel Macron has called for a political truce during the Summer Olympics in Paris, which began this Friday. Now, the French president has dissolved the lower house of parliament last month, leaving it with no clear path to form a new government. Now, it is possible that Macron could now wait until after the games to end in August to appoint a prime minister. And we should also mention they're coming up against a budget deadline with the EU Commission in terms of getting their finances under control. That coming up in September as well. Still with us, navigate all of this news is Claudia Panseri, Chief Investment Officer for Wealth Management for UBS in France. Claudia, I think you're the perfect guest to talk about this because it's fascinating that we're talking about waiting for a new government, understanding where they're going to go with the fiscal deficit. But I would argue that perhaps the bigger concern is that kind of budget deadline that they're coming up with the EU Commission in September. How close are they cutting it, and should the markets be more worried?
Yeah, I think the market is a bit compliant on the OAT. Probably you have seen the spread are moving back to the long-term average. We are at 66 basis points this morning. And I think the risk is really around the budget law, which needs to be presented in October. Keep in mind that usually you have the government working on the budget law during the summer, and now we don't have a government, actually. We have a government which only take care of daily business, not possible to put together the budget law. And France is in the middle of the excessive deficit procedure. So France needs to bring the trajectory debt back on the long-term trend, but also need to present a budget which is in line with a lower fiscal deficit.
Very quickly, we're hearing guest after guest talk about how the periphery is outperforming the core. Spain, Italy is looking stronger than France and German debt. It feels like in some ways that's an exaggeration. In other ways, we have this higher equilibrium in the spread. Claudia, very quickly, is France an inferior credit to the likes of Spain and Italy right now?
No, I think the reality is that France has a growth which has been slowing down quite a lot versus Spain and Italy. And the other issue is that Spain is not part of the EDP, while Italy is, but Italy doesn't have a deficit, excess deficit. So the reality is that France needs to bring that debt and deficit at the same time, but also external demand need to be, let's say, lowered. So the problem of France with no government today is that we don't know what France will be able to do in terms to cut the cost back. So before having the dissolution of the National Assembly, we had the minister cutting some spending, but today we don't know what's going on in the coming weeks.
Certainly something we're going to be keeping a very close eye on. Claudia Panseri, UBS Wealth Management CIO in France, talking about the bond dynamics on both sides of the Atlantic. After the break, we're going right back to the States and figuring out how you price in the geopolitics we're seeing out of Washington, D.C. More ahead. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself.
I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Let's get to your top stories. Kamala Harris facing a make-or-break week as she remains on track to becoming the presumptive Democratic nominee. Meanwhile, the markets, it's a tale of two German corporates, SAP rallying on that AI demand story, but Porsche taking a hit on an outlook cut. Now the focus on American tech earnings as traders look to Tesla and Alphabet after the closing bell in the States to keep up some of the momentum. Let's get back to our top story, though. World leaders scrambling to size up a potential Kamala Harris presidential campaign, all while bracing for the possibility of a Trump 2.0. Now, Harris has promised to unite the Democratic Party and win the election.
Predators who abused women, fraudsters who ripped off consumers, cheaters who broke the rules for their own gain. So hear me when I say, I know Donald Trump's type.
Let's get a little bit more from Bloomberg's Chad Thomas. Chad, look, we were hearing kind of soundbite after soundbite of Kamala Harris right out of the gate, really attacking President Trump. A lot of this is largely expected, given that she's trying to garner a lot of the support, not only within her party, but of course some of those independent voters as well. I'm more interested in what the take is out of Europe, especially in the context of a lot of the kind of questions about how much of the European leadership has really forged a relationship with Kamala Harris. What are you hearing?
Well, European leaders certainly don't know her as well as they know Biden. Biden, of course, has 5 decades of experience on the world stage, both as a senator, then as a vice president, as a true transatlanticist. And she really didn't have much wiggle room as vice president on foreign policy. However, certainly world leaders are saying they expect some continuity. She spoke at the Munich Security Conference here in Germany earlier this year and talked about the fact that the U.S. needs to remain engaged with the rest of the world. That, of course, is music to the ears of many Europeans, but they also are realistic that there is still a very high likelihood that former President Trump is going to win this election, so they are reaching out to Republicans as well, making sure that they have those connections just in case Trump wins and Kamala loses.
You know, it's interesting that we're talking about the possibility of a Trump 2.0 because it feels like the only European leader who's really almost prepared for that situation has been Viktor Orban out of Hungary at a time when even the EU presidency is looking to move the meeting that's coming up in August out of Budapest in response to some of his actions. I also was brought to my attention that Isabel Schnabel, for example, the ECB member, was caught off guard a couple of months ago, saying that Kamala Harris has kind of been in the sidelines. What does the international audience need to see from Kamala Harris to kind of reiterate that she could actually be in the Oval Office when largely her platform, to your point, Chad, has been focused on a lot of that domestic policy?
Yeah, and that has been the space that she's operated in, is in domestic policy. Look, usually when someone runs for president, they have many months, if not years, to prepare for that. They go out and give big foreign policy speeches to sort of map out what their thinking is on foreign policy. She now only has weeks, a few months to do that. The foreign policy community will be watching closely to see what she has to say. Some European leaders have been telling us, though, that her national security advisor, the one who works directly for her, is someone who knows Europe very well, and that has been heartening to them, that she is being counseled by someone who does know the region particularly well and spent time here during the Obama administration.
It's certainly something that we're going to watch very, very closely. Bloomberg's Chad Thomas, we thank you so much, giving us the international perspective on Kamala Harris and what that presidency may actually look like for not just Europe, but a broader audience as well, of course, as she kind of battles both the internal and external politics as well. Let's get a little bit more insight here. Scott Lucas, a professor of U.S. international politics at the Clinton Institute at University College Dublin, joins us this morning as well. Scott, it's fascinating to kind of get all of this news flow and understand what that means for international policy. And yet, we're not getting much clarity on either side of the aisle from Kamala Harris, from Donald Trump, outside of what this might mean for NATO funding. Scott, what are we missing?
With Donald Trump, you're not missing anything in that Donald Trump doesn't do issues. Donald Trump doesn't do foreign policy. He does sound bites and he does insults. So, you know, he insults NATO, he insults its members, and then leaves it open whether he would withdraw, even though he has privately said while he was president in meetings with NATO officials, yeah, we'll take off if I want to. On Kamala Harris, let's just be very honest here with viewers. Kamala Harris was kept in the shadows by the Biden team, not just on foreign policy issues, but on most domestic issues. Once Joe Biden decided to run for a second term, the Biden team saw Harris, who was the heir apparent, as being a threat to that. Now, in the past few weeks, that has changed. With the prospect that Biden would step aside, you have seen Harris make a number of high-profile speeches, mainly in the United States, although Chad referred to that important speech, and I do think it was important at the Munich Security Conference earlier this year. You see Harris beginning to establish herself in terms of her character, in terms of her profile, and I think the policies will follow. I think right now, however, the priority is you get unity within the Democratic Party going into that convention. You get Harris's choice of vice presidential pick, and you get the team that is around her, the team for domestic and foreign policy. And then after the Democratic convention, I think you see a rollout on policy side. All that being said, Europeans have been preparing for this. There have been behind-the-scenes talks, as you noted in your package, with Democrats and Republicans, and those include talks, not only with those around Joe Biden, but with those around Kamala Harris. So there's already contingency planning, as it were, amongst Europeans in terms of where we go with Harris, if she should succeed, and where we go if we have what would be, let's be honest here, the disaster of a second Trump term.
Well, Scott, let's bring it right back to the policy story. We're talking about that on a security perspective, but we need to talk about the tariff picture as well, because if we're talking about Kamala Harris bringing on some of the Biden policies as well, I think there's a pretty consensus understanding that the policy towards tariffs on Europe, the policies towards tariffs on China has not really changed from President Trump to President Biden. Steel tariffs, for example, are still on pause in terms of waiting till after the election to see how they all pan out. Tariffs on China remain to the same levels that they were during the Trump presidency. Do we see any thawing on that front in terms of the levies attached in a Kamala 1.0?
Well, let's take it step by step. I think the question of China, because it's so politically charged, I wouldn't expect any significant change on tariff policy under a Harris administration. It's a little bit different with Europe because, of course, with tariffs, what happened is that some of them were effectively adjusted to quotas. And so they haven't been as strict as they were under the Trump years. I think we're beginning to live, as it were, with that quota system, including the issue of steel. But your important word here was suspended, that, you know, tariffs on steel were suspended. What the Europeans are worried about is that still vague, but it is a threat out there by Trump, which is to impose a 10% tariff on anyone, anywhere, on any import. That sort of blanket sledgehammer approach is what has everybody really on high alert here. I think with Harris, there's more of a sense of that the adults will still be in the room. There will still be economic issues. Let's be very clear about that. We have not recovered from the 2017 period, but I think there's going to be a lot more comfort zone in terms of where you can negotiate with the rules of the game with Harris 1.0 than with Trump 2.0.
That actually create some sort of concern for the demographic. I mean, inflation is such a buzzword right now, not only for the financial community, but over in the States as well, the voting populace. This idea that tariffs, whether they're increased, decreased, kept at the same, is something that I feel like a lot of Americans will want to vote on. Will they, though?
Well, look, first of all, let me cut to the core of this. First of all, there needs to be, I'm just going to appeal to the U.S. media. Do not get led by the spectacle on this. Please provide reliable information about inflation to start off with, because it will be an attack line by the Trump camp. It's already being deployed against Harris, as it was against Biden, that supposedly inflation is out of control. That, quite simply, is not true. Inflation has been coming down steadily over the past 2 years in the post-pandemic period. That, when you establish that fact, then you can talk about what tariffs would add to this. And of course, the important point is that the tariffs had a significant effect on component prices coming into the United States during the Trump term. They elevated those input costs, which were then passed on to consumers. And some of that has continued because the tariffs have not been listed. I don't think tariffs will be an issue in terms of the election, because to be honest with you, I think it takes too much time to explain tariffs and a rather complex series of effects. But inflation will probably be an issue. And the more that the media can establish, first of all, what is happening with inflation, and then the connection with tariffs, that would actually serve the public quite well.
It's certainly one that we're going to keep a very close eye on. Scott Lucas, we hope you'll come back and visit us soon. Professor of U.S. and International Politics at the Clinton Institute in the University of College Dublin. I just want to point out very quickly, the Clinton Institute is named for President Bill Clinton in recognition of his role in the Irish peace process during his time as president. And he has not recently donated, but he has made visits to the Institute as well. We should mention that Bill and Hillary Clinton have both come out as not only donors to the Democratic campaign, but recently endorsed Kamala Harris for president as well. Now, coming up on the program, we come back to the markets. Tesla reporting results later today, with investors eager to see if there are bumpy roads ahead. The robo-taxi and a new generation of cheaper cars. We're going to get the latest next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are not only focusing on moving customers to the cloud. We look into their business model transformation. So when you talk about SAP, it's all about how can you actually grow your business. I mean, take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. Or when you talk about resiliency of supply chains, we infuse AI. We are connecting your supply chain with the operations of thousands of your suppliers. And that's why SAP is so relevant these days.
The SAP CEO Christian Klein speaking to our very own Tom McKenzie earlier this morning after the German software company reported a 25% bump in cloud revenue in the second quarter. It is one of your biggest index contributors to the Stock 600 today, higher by 6.4%. And even though it's one of the big gainers, you are seeing one of the big losers also moving the markets here as well. Porsche shares, for example, falling the most on record after the German car maker cut its outlook for the year. The company saying a shortage of aluminum parts could cause it to stop productions of some models, adding to pressure from some of those slowing sales over in China. Let's get more on this and bring in Danny Lee, our Asia transport correspondent, joining us out of Hong Kong. Danny, what is going on at Porsche?
Yeah, Porsche has been found to have an issue with a key supplier, and analysts are rightly raising questions about how one key supplier could make and cause such disruption to its production lines. And so we see this impact in cutting its outlook on revenue. So it expects to make around 39 to 40 billion euro this year, down from 40 to 42 billion euro. That could mean the first drop in revenue for the first time since 2010. And so when they're also looking at and projecting an impact on the return of sales, it's not a good look at how one supply could cause such a lot of disruption. And this all really comes off the back of a pretty tough run for Porsche, and particularly in markets like China as well, and also rowing back on its EV targets. So we'll hear tomorrow from what the company has to say during its half-year results, but clearly this is not good news, more bad news for Porsche.
Is Porsche in any way a microcosm for Tesla? I can recognize they are two very different companies that do very different things with very different leadership, but I'm curious how much of a read-through there is.
I don't think there's much of a read-through here at the very least. You know, Porsche has its own very unique problems, mounting problems at that at least. You know, the business is still robust, but when you get to a position where you have to stop production potentially when one of your key suppliers can't supply, that's a pretty poor look. But for Tesla, you know, very different contrasting picture when it comes to their ability to drive up EV sales demand. Clearly, it's been a bit of a tough time for them on the sales front, but a very different contrast to how Porsche is doing right now.
All right, Bloomberg's Danny Lee, we have to leave it there, of course, as he speaks. We are seeing Porsche shares down by just shy of 5% this morning, dragging down the entire index. We thank you so much. Let's go from the world of cars to the world of banking, if we can. Julius Baer has hired Stefan Bollinger to be its next CEO, who will be joining from Goldman Sachs, where he is currently co-head of the EMEA Private Wealth Management. A Swiss wealth manager aims to draw a line under last year's Signa real estate scandal. It emerged last November that the bank had run up a $700 million exposure to the property empire. And in the meantime, Mag 7 earnings are getting underway, with Google parent Alphabet reporting later today. Let's bring in Bloomberg's Tom McKenzie, who, of course, is monitoring it very, very closely. We just got SAP numbers, and they're talking about rising AI demand and this kind of unstoppable trend that I think a lot of people in the markets are saying, is this the end of AI? Where does Alphabet fall into that?
Yeah, and that's really interesting, because speaking to the CEO of SAP, he says at least for them, they're still very much in the game when it comes to AI, and they're seeing that demand coming through from customers. So that is going to be a key question as well, as you rightly position it, around Alphabet. To what extent are they successfully integrating their AI products into the products that they're shifting, of course, to their enterprise customers, but to end users as well, retail customers. So we're going to be focused on the search engine part of the business, to what extent that's coming back. There's an expectation that that will come back as a core driver of revenues, of course. And then there's the cloud business. So they are behind the likes of Microsoft. They are behind the likes of Amazon with AWS when it comes to cloud. It's about a $10 billion business for Alphabet right now. Of course, they're hoping to play catch-up. That is where analysts see the most growth potential longer term for Alphabet. And again, the AI incorporation is going to be really key to that. Overall revenue is expected to come in around $84 billion US. We're going to look at capital spending as well. The stock up about 30% year to date. Interesting, and Morgan Stanley analysts coming out this morning upgrading their view on the stock, looking at a 16% premium.
You know, when I think big tech, I think big acquisitions, and yet Alphabet, Google isn't able to make one this time around. The $23 billion deal, or offer, I should say, for Wiz, that got turned down. Who says no to $23 billion?
Yeah, I mean, wow. You've got to be brave, haven't you, as the founder, the CEO, and the executive team at Wiz, this cybersecurity company, to turn down, as you say, a whopping $23 billion US. Even for Alphabet, that is not small change. It would be one of the biggest, would have been one of the biggest acquisitions. You're absolutely right. Wiz turning it down, saying they were humbled by this offer, but they are sticking to their plan to get to an IPO, to get to annual revenues of $1 billion plus. It's a cybersecurity company that really interestingly looks at cloud data companies like AWS, like Azure, and like Google Cloud, and layers on their cybersecurity platform onto that to test the data and make sure that there are no security flaws there. Alphabet wanted to add this on. They're trying to build out their cybersecurity offerings to make their cloud ever more attractive to their customers. They recently bought Mandiant for $5.4 billion. They're incorporating that. Wiz would have rounded out the proposition. It's not going to happen, so they'll have to do it organically or look for other acquisitions. Wiz looking towards that IPO.
Yeah, it's fascinating, especially at a time when the IPO market isn't exactly a hot market to be tapping into, and yet they have that much confidence in the business. Bloomberg's Tom McKenzie walking us through that crucial tech story. Now, coming up, we go from the heavyweights of the States to the heavyweights right here in Europe. Has the world's largest luxury house avoided the malaise plaguing the sector? We're going to get a preview of what to look out for ahead of LVMH's results coming up next. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
finally to my favorite part of the entire show, where I get to talk about fashion. LVMH likely to report an increase in second quarter sales as its key fashion leather goods unit when it publishes results after markets close today. Let's get a little bit of a preview here by none other than Bloomberg Opinion's Andrea Felstead. Andrea, what is top of mind for you? How do you even approach a behemoth like LVMH?
Well, all eyes will be on the fashion and leather goods. That's the sort of Louis Vuitton bags, Dior bags, Loewe bags. That's the real profit driver of the group. So that is the key number, and the market is looking for around 2% organic sales growth in the second quarter. And when you think a year ago, we were up against that moment when China reopened from strict lockdowns. We really thought the Chinese consumer was going to, revenge spend their way back. That really fizzled out. So we've got some, very tough comparisons, and the market is slowing considerably.
Well, broaden out the China question for me as well, because revenge spending worked great for me in my pocketbook, but it isn't working for China, and it isn't yet. We're seeing it kind of being offset by the resilience over in the States as well. How long does that dynamic stay at play?
Well, there's very little sign that the Chinese consumer is coming back. The wealthy are still spending, but it's the sort of the middle class that isn't back yet. And crucially, they're not back in Europe. That is the real driver when they start traveling to Europe, because they spend a little bit more when they come.
Yeah.
That's not happening. The States is interesting. You've got the super wealthy still spending, Brunello Cucinello, Cashmere, and Hermes handbags.
Yeah.
But it's that so-called aspirational customer that was hurt by inflation, higher borrowing costs. They're not really coming back yet. And indeed, we will be looking to LVMH to tell us their read of what they see happening in the States.
But how does that break down? And this is, I think, where we go into kind of the behemoth of the question, because you do have the handbags, you have the purses, but then you have the spirits business as well that kind of does its own thing. Swiss watches is another piece of it. How does that kind of product breakdown start to look?
Well, it's quite similar. I mean, spirits have suffered from the same factors as luxury goods. Actually, even more extreme. Actually, watches is interesting. You've got Chinese demand for watches really slowing. That at Richemont we saw that offset by demand for jewellery. So we'll see with LVMH whether we get the same dynamic. Jewellery seems to be sparkling, but there's question marks over whether Tiffany's enjoying that because of its focus on more of the middle class aspirational consumer. So we will see with LVMH whether we get the same patterns there.
Only way to buy jewelry is if it's sparkling. Andrea Felstead from Bloomberg Opinion, we thank you so much for giving us that preview of those LVMH results. In the meantime, I want to talk about some of the other results that we have gotten right here in Europe. We have the SAP and Porsche, kind of microcosm for what we might see over in the States as well, with the likes of CrowdStrike, of course, top of mind, given the global outage. Those shares higher by 1.2% this morning. Then you have Alphabet and Tesla reporting after the bell over in the States, both higher, despite Alphabet getting turned down for that $23 billion offer for Wiz. Tesla, of course, also higher by 0.4%. There's a lot going on in these markets. Broadly, risk sentiment is turning fairly negative, despite some of these kind of small outperformers. SAP not able to hold up the entire market. There's plenty to digest in the FX markets, the bond markets, the equity markets. I'm going to toss the baton over to the Bloomberg Brief, Danny Berger and Manus Cranny in New York. This is Bloomberg.
One of my greatest advantages, I own my company 100%. No board of directors.
I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. Mm-hmm. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set the agenda.
Securing support, VP Harris gains enough delegates to clinch a Democratic nomination. IPO over Alphabet, cybersecurity startup Wiz rejects Google's $23 billion offer and sticks to a plan to go public. That's as Alphabet is set to kick off big tech earnings alongside Tesla after the market close. Good morning, Manus.
Danny, good morning. They just couldn't help themselves, could they? Dip buyers of the world unite. They came in, they gorged on Tesla, up by 5%. We give a little bit back this morning on the NASDAQ. We're counting down to those Tesla numbers along with Alphabet. What is the core search like? What is the advertising revenue like? We're going to vacillate between talking about debts, deficits, and cuts from the Fed and politics. Goldman Sachs talked about the deleveraging in the equity market last week. It was almost like the unwinding of the meme stock frenzy of 2021. So leverage has been taken off the table. We're a little bit uneasy. We're a little bit of seasick. We've got politics and big tech. But you just couldn't help yourself diving in there and picking up some ferocious Mag 7 buying, up by 2.3% yesterday. Yields dropped to 4.23%. Are we suddenly now going to begin to talk about strength of the U.S. economy, the GDP? Remember the PC, the personal consumption expenditure, the deflator? We're actually going to talk about those numbers a little bit more as the week goes on, as the halo effect around Kamala Harris's presidency bid begins to shift its narrative. Dollar-yen, you're just seeing the dollar down, the yen strengthen. Yes, politics is part of that narrative. I know that you covered that last week, Danny. But this strengthening in the yen, it could be that there's a move from the Bank of Japan, also reinvigorates, and another move for intervention. They're starting to talk about that again, the potential for that to come. Danny, good morning.
Good morning, Manus. This just coming from our Bloomberg News team that Kamala Harris's presidential campaign has raised $100 million since Sunday afternoon. So it's been less than 48 hours, and already you see this momentum. You get the sense that maybe some big donors had been holding back, just waiting for the switchover to happen. But I'm just looking at some of the names here. We talked about Soros yesterday, Evercore founder Roger Altman, Centerview Partners co-founder, and BlackRock co-founder Ralph Schlosstein. So there is this real momentum from Wall Street. But of course, we don't really necessarily know what her policy will what will shape like, especially when it comes to M&A. Will she want Lena Khan still as the FTC chair?
Well, this is where we're going to begin to understand the halo effect of having got the 1,976 delegates to technically get her over the top. So that nomination looks as if it's secured. So she has that. But now we need to understand, where is she on, as you say, regulation? Where is she on foreign policy? Where is she on tax? What are the things that she will be able to go head-to-head with Trump on? Now, you talk about sort of the capital donors. I've gone for something slightly more glitzy. I mean, we've been chuckling. We've both been chuckling about Charlie XCX. And, of course, we were looking at the Twitter banner for Kamala Harris. This is about Kamala is Brat. Danny has literally, this has been 24 hours of Kamala is Brat with Danny. But it's also about the rest of Hollywood coming out behind Kamala Harris. And they've been reasonably recalcitrant when it comes to Biden.
Still waiting for George Clooney to give his opinion. He hasn't yet after he wrote that op-ed. But Barbara Streisand is back Kamala Harris, so obviously it's all over.
Yeah, but then, of course, where is not Barbara, where is...
It'll come to you, man.
It'll come to me. Where's the rest of Hollywood? You've got Ariana Grande, Cardi B, and John Legrand.
Yeah, there you go. Okay.
John Legend.
Yes.
Got
perfect.
It right in the end.
You've got pop culture down, Manus. It's all good. Okay. Well, Kamala Harris did speak yesterday. Let's take a listen to that.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Meanwhile, Donald Trump's running mate, Senator J.D. Vance, called out Democrats for shifting to Harris.
Democrats are the ones who want to throw out 14 million ballots and not elect Kamala Harris, but select Kamala Harris. With a bunch of billionaires and Barack Obama and Nancy Pelosi making the decision instead of Democrat voters, it's disgraceful, and that's the threat to American democracy.
Let's bring in Bloomberg's Vonnie Quinn, who's in Washington. Vonnie, there we go. Kamala is over the threshold now to get the delegates. What kind of momentum now is behind her?
Huge, Danny. You just read out the numbers there from the Harris campaign. $100 million between Sunday afternoon and Monday evening. More than 1.1 million unique donors, and nearly 2/3 of those were first-time contributors. So that is a real feather in the cap for the Harris campaign. It's actually the Kamala campaign. She rebranded Biden headquarters, and if you noticed there in the video, it's the Kamala campaign at this point. She's going to need that money, though, and she's going to need the money from all of the donors that you mentioned, and Abigail Disney, another one back in the fold. The super PAC allied to Biden, Future Forward, had said also that it received $150 million worth of new pledges from donors who hadn't previously committed to supporting Biden or who had paused giving. So it's a massive, massive effort, and it's a united Democratic front at this point. Not only do you have her over the limit and the presumptive nominee now, but you have all this money coming in. She's going to need it. She starts campaigning in Milwaukee, Wisconsin, a swing state, tomorrow, in fact. And we already got a glimpse of what the type of thing she's going to say on the campaign trail is. She's going to have to fight back against some of those claims that J.D. Vance was making just there in the video. The Trump campaign tying her to the less popular outcomes of Biden's agenda and saying also that she lied about Biden's mental capacity to serve as president and so on. That's going to be a theme at the beginning of this campaign trail, and Harris will be ready to meet it. She already, in her chat to staffers today, when she was thanking them, I say today, it was yesterday your time, she already talked about her record as prosecutor, right, as Attorney General. That wasn't something necessarily she would have wanted to bring up 4 years ago. It was a different moment in time. It was a different mood, and Liberals didn't particularly want a law and order candidate. But you can be sure she is going to hammer that home beginning tomorrow.
Vonnie, good to see you. Look, the money's rolling in. We're moving to this more assured, confident Kamala Harris. She's got the backing of the party. She's got first-time donors flooding in. And I think that's what's interesting here in terms of the $100 million. It's coming in from first-time donors as well. But when the halo effect, to a certain extent, dissipates, in other words, the euphoria of having Biden off the ticket and Kamala Harris on the ticket, where will the rubber meet the road on policy? Where will she go head-to-head with Trump? We've already heard her address abortion on Instagram. So where will she take the fight to Trump?
Well, we got a glimpse of that in the Monday speech as well that she made to staffers, Manus. And I can also suggest that the idea that we only have a few months to go to the election might play in her favor that way, because that halo effect might last a little while, right? The Democrats have taken back the narrative that had moved towards the Republicans after the assassination attempt. And now the Democrats have that again. They can perhaps rewind a little bit to the point in time when Donald Trump was actually convicted. And that's what Kamala Harris did today. She talked about the fact that she had met, you know, fraudsters, predators and cheaters, and she said that she knew what Donald Trump was. But to your point, policies, she's going to have to start enunciating them. She's going to have to start giving us more detail, because voters will want to see what she is standing for. Reproductive rights, you mentioned, but there will be all manner of other things, climate change and much more.
Okay, well, we'll see where the depth and direction of that goes over the coming weeks. Vonnie, thank you very much. Vonnie Quinn, burning the late oil in Washington for us. So investors are now weighing in on elections and how they will play out for markets. Jim Zelensky at Janus Henderson writes this: a clean sweep in the US elections should boost the term premium in treasuries by 20 to 50 basis points as the fiscal largesse becomes intractable. But the odds of a clean sweep appear to have moved lower from close to 50-50 beforehand. Of course, that is before Biden stepped down and Kamala Harris stepped in. Jim joins Danny and I now. So here we are. We've moved from this assurity that was galvanizing the bond markets about a clean sweep. So the headwinds to the steepeners grew last week. We had that slight flattening. When you look at Kamala Harris stepping into this, it doesn't say to me that suddenly the Democrats are going to be so much more fiscally responsible. So what's the response mechanism, the appropriate response mechanism from the bond market? Jim, good morning.
Good morning, Manus. Look, I think the short answer is neither party gets awards for being fiscally responsible. And a clean sweep on either side, to me, would be damaging, you know, for different reasons. I think with Trump, clearly the concern would be tax cuts. With Democrats, probably a little bit more geared towards spending. But on either side, we are right at the precipice, I think, of having the debt situation becoming intractable. And I think that's the worry of markets is, you know, gridlock is good. So I think on the thesis that gridlock is good, you know, anything but a clean sweep probably leaves markets in a better position. That's probably what we have priced in. I think the clean sweep, though, you know, could lead to a little bit of loss of kind of logic and reason and allow things to get a little bit out of control, at least on the narrative side, and lead to that steeper curve and that fiscal irresponsibility premium that I'm talking about.
Jim, I mean, we've seen this abroad of a bond market that's been able to react to certain governments spending too much. The UK will forever live as the classic case. What is your confidence in a bond market that can have that function in the US, that the vigilantes can come in and bully certain policy from the US if we do get a clean sweep and, as you say, the debt situation becomes intractable?
It's so difficult to know what the magic number is, and I think we saw in the UK, markets get very concerned that we had crossed over that magic number. The reason it's so difficult is that as long as interest rates don't exceed your growth rate, things like that, as long as the excess savings pool is sufficient to take down all the bonds that are being offered, you don't have to have a crisis. The problem is none of these relationships are linear, right? They're very exponential. And it's only when markets lose confidence that you really see that reaction. I think given that we are in a position now, you know, with so many of the expenditures being either mandated or interest expense, you know, having to be paid, there's just not a lot of control over what remains. And I think for that reason, I think there's a little bit more sensitivity. You know, does this take us over the precipice? You know, I'm not sure. I just think the markets have to respond by pricing in a higher risk of that happening.
So what trumps what? In the next 6 months, you're going to have a Fed, which in theory, if inflation goes according to plan and the markets are right, in theory, we should get to rate cuts. That should deliver a response mechanism from the bond market. Or does the bond market responsibly cast itself forward and look at the risk of deficits and debt which outweigh the rate cuts? It's almost like a bifurcated bond market. 6 months, the next 6 months, followed by the following first 6 months of 2025.
Yeah, it's a classic tug of war. I mean, when you look at history, the odds are really quite high that you'll get lower rates, lower long-term rates once central banks start cutting. The only reason you wouldn't is if inflation somehow reignited. I don't think that's in the cards. And so that's your argument for lower rates. I think tariffs, the fiscal largesse, those are the arguments for higher rates. I think the lower rate argument wins out. I think the slower economy, the really good evidence that we get that inflation is coming off the boil really nicely. We see more evidence with commodities coming down. Wage pressures look quite well behaved. So that argument remains very strong. And so I think that is probably going to win out. It's just a higher risk environment, higher dispersion environment that I think many are giving it credit for.
Well, Jim, I know that you think that the markets maybe are getting overexcited about the rate cutting cycle, that yes, something has changed, it is on its way, but maybe we've overdone that. And that gets to a conversation that has been shifting from going when the Fed is going to cut to by how much they're going to cut. So do we have enough disinflation in the system that it looks something more like a classic rate cutting cycle, or are you just talking about a mid-cycle tweak, just an adjustment?
I think it's probably more than an adjustment, but you've got to recall here, markets get very impatient. They see weakness, they see disinflation, they want a response. But if you're a central banker, you're probably thinking, hey, this is exactly what we wanted. It's what we were arguing that we needed. And so I think they're going to be patient. I don't think they will feel like they have to rush into things. There's actually less evidence that they have an overly restrictive policy than what they might like. So I think the torch has been passed, though. Inflation was probably the theme of the last 2 years, clearly. But it no longer is the key theme, right? You've had that story baked in. Inflation expectations have remained very stable. Central banks, markets, everybody's highly confident in that story. As I mentioned, commodities are now coming off. What you don't have is maybe the full story on things like employment, the deficit financing, all these other issues that probably now take a little bit more precedent. So near term, I would watch employment. Can they cut more than once this year? Looks like September is highly likely. Once you go beyond that, I actually do think they're going to look for a bit more evidence that things like employment are softening. That will give them both arguments to really rest on. And so for market expectations to now be exceeded, I think on the easing front, you probably need a little bit more evidence for the Fed to move.
Jim,
and to move quickly.
We appreciate your time this morning. Jim Zelensky of Janus Henderson, thank you. Okay, let's get to some of the other top stories that are trending on the terminal this morning. Porsche shares, they are falling by the most on record after the luxury car maker cut its global outlook for the year. The German manufacturer said a shortage of aluminum parts could cause it to stop production of some models. Porsche is also struggling with weak demand from China.
Julius Baer has hired Stefan Bollinger as its next CEO. The Goldman Sachs veteran is relatively unknown pick to lead the Swiss wealth manager as it seeks to move past losses related to European property company Signa. Bollinger is to start his role no later than February the 1st of next year.
Meanwhile, CrowdStrike CEO George Kurtz is being called to testify before Congress after the defective software update caused widespread global outages. The company has been asked to promptly schedule a date after that disruption hit healthcare, airlines, port companies, and governments.
Coming up, cybersecurity startup Wiz turns down a massive takeover bid from Google.
And later in the show, we're going to be catching up with Amy Wu Silverman, Managing Director and Head of Derivative Strategy at RBC. Is the rotation still alive, or is it over? This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Cybersecurity startup Wiz has turned down a $23 billion offer from Alphabet. Wiz instead has decided to move forward with plans to IPO. The rejection also comes with Alphabet looking to compete in the competitive cloud services market, so also blow to Alphabet's ambitions. Joining us now is Bloomberg's Tom McKenzie, who joins us. Tom, why IPO? It's not like it's exactly the strongest market. Why go for the IPO instead of the sure thing?
Yeah, it's a brave move, isn't it, Danny? Turning down $23 billion from Alphabet. Even for that company, of course, that is no small chunk of change. It's sizable. So they've turned it down. The CEO is saying, look, he's humbled by this offer by Alphabet, but they are going to instead pursue their plans for an IPO, get to $1 billion a year in revenue, and get to that public listing. And this was a business that for Alphabet would have been an add-on. They invested about 2 years ago in Mandiant, about $5.4 billion, so a much smaller deal, but that's been really consequential in terms of their cybersecurity offerings. They were hoping at Alphabet that they could integrate Wiz into their cybersecurity offerings to make their cloud unit just that much more compelling for their customers, because that is where analysts see really the most upside for Alphabet going forward. But they have to look at other options now, maybe organically investing or looking for other acquisitions in that space.
Yeah, I just wondered to what extent was the concern about, antitrust pushback something that sort of played into the thinking here. But look, we could talk about that all day. Let's get the meat and potatoes of advertising, online advertising, and core search. Those are the two things that we'll keep an eye on Alphabet tonight. And also in terms of where are they on climbing that ladder in competition on the cloud? Is that what's going to dominate the response mechanism from Alphabet?
Yeah, look, you're absolutely right. It is the ad search engine. That gives us, of course, a gauge in terms of the consumer and retailers and business as well in the US, but also the search function in terms of the driver of revenues. That is still one of the most consequential units. And then cloud, as you say. And again, that is the area where analysts think the most upside in the future is going to come from for Alphabet. $10 billion in terms of the size of that unit right now, competing with AWS, of course, of Amazon, competing with Microsoft's Azure. And that ties back to your regulatory point around Wiz on that point, which is key as well. $83 billion total revenue is what's expected for the second quarter, but the focus will be on to what extent they are integrating AI into their products within the business, and then the products they're shifting out to their clients as well.
Okay, well, we'll keep an eye on those, Tom. And it's going to be a hard one for them to beat. If you look at core search, in the first quarter, that was the highest in 8 quarters. But we've all been busy, and we'll double down on our busyness searching for politics now. Tom, thank you very much. Tom McKenzie there, giving you the preview. We're counting down to Alphabet a little bit later on. Warner Brothers, keeping a grip on the NBA, the TV rights. Let's talk about the matching bids in just a moment. Context matters from a beautiful New York.
Leaders in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially, I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
It's Bloomberg Brief. I'm Manish Kranny alongside Danny Berger in New York. Time for the front pages. This is what's making the headlines around the world. First up, we have the SEC has approved the first spot Ether ETF starting today. Ether is the world's second largest cryptocurrency with a market cap around $415 billion. Bitcoin ETFs have attracted more than $17 billion in new money since their launch in January. Coming in from the cold, eh?
And next up, speaking of coming in from the cold, or not being able to get anywhere from the cold, Delta is still struggling to regain their footing after that tech outage on Friday. 800 flights canceled as of Monday afternoon. Basically, the main reason they've struggled so much more than everyone else, Manis, is because their crew tracking software went down and all this, so they basically don't know where anyone is.
That's reassuring, isn't it, between the captains and the crew. Now, when it comes to money and sports, we track it quite well here. Warner Brothers have offered to match Amazon's bid. This is for the NBA TV rights. NBA was on the verge of signing a new $76 billion deal. This was an 11-year deal, Danny, with ESPN and two partners. So this is the value in bringing sports onto your platform.
Well, it's so important for Warner Brothers because they have TNT, which broadcasts all these, and they basically charge $3 extra a month for TNT. Are you really going to pay that if you don't get the NBA on it?
Look, I mean, you just got to click on your own TV and see how many of these apps have you actually got and how much you're actually paying for. I just clicked on mine yesterday. I'm overpaid and oversubscribed. I'm going to start watching Inside NBA, you know that?
Yeah. Are you?
Yeah. I got to learn about American sports. She keeps telling me.
This is a whole new Manis Cranny.
Whole new world.
I can't believe it.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like, how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after
after I retired was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Securing support. VP Harris gains enough delegates to clinch a Democratic nomination. The campaign says it raised more than $100 million since Sunday. IPO over Alphabet. Cybersecurity startup Wiz rejects Google's $23 billion offer and sticks to a plan to go public. That's as Alphabet is set to kick off the big tech earnings alongside Tesla after the market close.
Well, congratulations, everyone. You maybe survived the rotation panic because here we are yesterday, big cap tech leading the way. The Mag 7 by far outperforms. Maybe today we go back to normal. The Russell 2000 is up 0.25% while the S&P and the NASDAQ falls. I mean, we have been running away to the comfortable parts of this market, but maybe it had to do with the hedge funds. Goldman says that hedge funds had the biggest deleveraging last week since 2021. But now we gear up for earnings, where a third of this market reports. Your U.S. 10-year yield down by 2 basis points this morning. 423 is where we stand. And Manus, you pointed this out this morning, too, that the yen is gaining again versus the dollar. We're kind of in this weird, quiet summer lull. Not a lot of news necessarily moving this. We do have a BOJ next week, but for now it's politics that has been capturing the attention of markets.
It's interesting. You begin to see notes come out now and talk about what's the next trigger to intervention. How we've ended up on intervention as opposed to politics, I don't know, but let's go with the flow.
Yeah.
But you're right. So on euro yen, City's saying if euro yen hits 180, you're going to see intervention. It's more as whether the next Bank of Japan, yes, there is macroeconomic policy as well, whether that is a live event. And when it comes to the earnings, we're going to get Tesla and we're going to get Alphabet. But if you look at the profit expectations, they're expected to grow by just under 30% versus the past 3 quarters where we've grown by around 44 to 49%. So the bar is, I don't know, is the bar low or is the bar?
It's such a weird thing because it's lower, but still really high. But Manus, this is exactly what people have pointed to about the everything else rally, that you're in this situation where the big cap tech growth is slowing from a really high base, and the rest of this market is picking up from a really low base. So they're kind of opposite ends of the spectrum, and people point to that saying maybe this is why everything else can do better, because they're playing this game of catch-up.
And then you have a look at what happened yesterday. I mean, our headline was, you know, dip buyers of the world. The ferocity of the dip buyers came in. You know, if you see NVIDIA down 9% last week, is that, I mean, technically you're almost kissing a correction. So is that enough of a thesis to actually step in and buy that? And Tesla's had such a blasting run. People are saying it's trading like a meme stock.
Well, this is the argument that fundamentals haven't changed, but they might change in earnings season. The proof needs to be in the pudding.
Well, politics has caused a lot of consternation, but does it dislocate your investment thesis? We'll talk about that in just a moment. The Vice President, Kamala Harris, you can see her there. On the presidential campaign now, isn't she? She's raised more than $100 million between Sunday afternoon and Monday evening. Harris has enough delegates to clinch her party's nomination for president. She spoke at the campaign staffers event in Wilmington, Delaware last night.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Meanwhile, Donald Trump's running mate, Senator J.D. Vance, called out Democrats for shifting to Harris at a rally in Ohio.
Democrats are the ones who want to throw out 14 million ballots and not elect Kamala Harris, but select Kamala Harris. With a bunch of billionaires and Barack Obama and Nancy Pelosi making the decision instead of Democrat voters, it's disgraceful, and that's the threat to American democracy.
So the gloves clearly come off now in terms of the response mechanism from the other side. Our Bloomberg chief Washington correspondent Anne-Marie Hordern joins us now around the desk. So she's got the votes technically all in behind Kamala Harris. So the attacks are going to start. For us, we were chatting about this morning, the three of us, which is the halo effect will dissipate slightly after this euphoria. And then we're going to have to understand who is Kamala Harris and where is her strength of policy. So where is it?
Well, this is a really big reset for Kamala Harris. She was a senator, she was an attorney general, she was a vice president. But when you're a vice president, you really need to shepherd through a lot of the policies of the individual at the top of the ticket, President Joe Biden. She's going to lean into some of what the Democrats would view as their successes. We saw her do that yesterday when she made this campaign stop in Wilmington. She might want to lean in a little bit more. We've seen her into things like the care economy, affordable child care, student loans, things like that she has spoken to in the past. The big policy that she is going to shepherd, and she has been shepherding for this administration, and she's been an ardent supporter of, is women's reproductive rights. And this is where the concern is as well in the Trump campaign. And she spoke about it yesterday. She wants to reestablish Roe v. Wade. She's talked about this already. She was the face of it, talking about abortion and women's reproductive right, women's reproductive health when she was the vice president. Now she's, of course, going to do that as the presumptive nominee.
It's interesting because during this, Trump has been relatively quiet in terms of actually going after Kamala Harris. Anne-Marie, I know we had the conversation of is by picking J.D. Vance, is he picking his attack dog that can actually be the one who goes after the Democrats? How is that shaping up in terms of them campaigning not just for themselves, but actively against Kamala Harris?
Well, I would say Trump was restraining himself, but a little after midnight last night, he went to Truth Social and was talking about this ABC debate and thinks it's, he wants to move it to Fox, and he's been truthing a lot about it, and he called Kamala Harris, I believe yesterday, dumb as a rock. So he is not stepping back from that attack dog that many thought he would, potentially because the Trump campaign is probably frustrated. They spent a lot of time and money preparing to go after Joe Biden, and now they have a brand new ticket they need to deal with. But that doesn't mean J.D. Vance is also not going to be the attack dog. We saw some of that yesterday. He was saying how it was unfortunate, it's unfair. He wanted to debate Kamala Harris, and now that's going to go to the top of his ticket, Donald Trump.
Yeah, be interesting to see who is the VP that could maybe match up against him. Anne-Marie, thank you so much. Bloomberg's Anne-Marie Hordern, who you can catch in a little over 20 minutes' time on Bloomberg Surveillance. So let's talk about where volatility stands at the moment. The latest developments have thrown what our next guest calls another volatility pothole, but elsewhere about the market, she writes this. It's Amy Wu Silverman of RBC. Sentiment has shifted from fear of upside to fear of downside. Specifically, investors went from bidding up call options due to FOMO and MOMO to now focusing on the downside risk. And Amy joins us now. Amy, I wonder how this shift also squares with what we've seen over the past 2 weeks. That is this rally of everything and a lot of junky kind of stocks rallying too.
Yeah, that's right. And it's interesting because, you know, my comments that you had read there was really much more related to the Mag 7. You're really seeing that exuberance being sucked out, but it was kind of staying in IWM. The interesting thing is, Danny, whenever we see these, they tend to be short-lived. We haven't seen a sustainable pickup in that call skew, so that right tail exuberance in IWM and the small mid caps. And here we are again, back to our old favorites. And I'm quite interested to see if that lasts during earnings season as well.
You mentioned some of the fundamentals there, like the earnings season itself. But politics have been the alpha of the bond market, perhaps less so with the equity market. The equity market, that great rotation, that thesis of last week was pushed along a lot by rate cuts. Do you think the great rotation, if it is that at all, has run out of puff in the near term until you get the rate cuts underway, or do you think it will reassert itself?
Look, I think for now it's the former. when we look at the options landscape in small big caps, so your IWM proxies, you don't see that bit to the upside that you saw even a week ago. And, you know, one of my kind of theories on what happened was, yes, it was a growth rotation, but it was also a little bit of a knee-jerk reaction post the assassination attempt on Trump. When we looked at our Biden basket versus our Trump basket, you saw substantial outperformance in the Trump basket, perhaps saying, you know, he's definitively got this election locked in. Let's go ahead and start doing the 2016 playbook of his policies. Of course, now we have another wrench in the situation with a completely new potential Democratic candidate. And I think markets are reversing a little bit of that trade from last week as well.
How do you separate these things, Amy? Because you look at, for example, Goldman Sachs has the statistic out that hedge funds deleveraged the most since 2021 over the past week, and especially these long-short portfolios who are probably long big cap tech and then short some of these smaller cap type things. Because when you look at the different pillars, there are different things that could hold this up. How do you try to disaggregate them in understanding the longevity of that type of rally?
Yeah, look, this is by far the trickiest part. I think when you look to sentiment and positioning, that's where you get the best option signal. But look, the hedge funds, of course, are a key component of the market. They are not the entire market. And when we talk to institutions that are not hedge funds, you know, one thing we've talked about for a long time with them is when they will go all in on the trades that expand the breadth of the market. That's been an overwhelming concern for a long time. I don't think we're there yet, but it's something that's been on many asset managers' radars. And I do think that that's going to be more coincident with actual rate cuts happening versus sort of pre-trading it. That's something we talk about a lot with our chief equity strategist.
It's very interesting. I had lunch with somebody on Sunday, and they said, you know, their portfolio is up 25%. They're a bit worried, but the guy told them to take off some of their big cap stocks last year, and they're still not there. But volatility is going to rise. My response to him was, well, buy yourself some protection. That was a personal view, by the way, not an explicit Bloomberg view. You look at the volatility spikes that you have. 2000, 2011, Brexit, Trump won. Vol is low, but what is going on in the volatility market? Why is it so repressed? Is that people aren't prepared to spend the money on volatility, or is it they just don't believe that you're really going to see an explosion in volatility and that Goldilocks soft landing will prevail, hence vol is repressed?
Yeah, it's two huge factors. One is we're sort of in this paddling duck market. And, you know, we just described this as everything looks kind of calm on top, but you don't see that duck violently paddling underneath. That's our rotations, essentially canceling each other out on an index level for volatility. And the second is that correlation component. You know, when we get these rotations, our implied correlations are quite low. But I think, as we talked about earlier, it's almost hit a lower bound. You know, I don't know how much lower we can go. And exogenous shocks tend to raise correlation, which thereby feeds into higher volatility. I think we're getting to a point, we've seen VIX start to bubble. And I think, you know, you can continue to get that when you look at precedent from historical elections. You know, we've gone as high as 25, 35, even more. And I just think that, you know, we're not quite there in terms of the potholes, but we can be.
There's nothing we love more than an exogenous shock at about 4:59 and 55 seconds just before we read the headlines. Amy, thank you very much.
Good way to wake up in the morning.
It's the only way to waking up in the morning. Exogenous shock. We're in good form. Amy, good to see you. Always in good form with that land of limbo for volatility waking up. Amy Wu Silverman over at RBC. Coming up on the show with Danny and myself. Wiz. No thanks. That's the message to Alphabet. The cybersecurity startup says we're off on the IPO road. Take your $23 billion. We've got other things on our agenda right here on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Brief. I'm Manus Granny alongside Dunny Berger in New York. So the cybersecurity company Wiz turns down $23 billion takeover bid from Alphabet. Instead, they're going it alone. The plan is to IPO. Tom McKenzie is with us. So this is mud in your eye to Alphabet, really, isn't it? I mean, this was their opportunity to have a step change in cybersecurity in the cloud. But Wiz, they've got other plans. How assured are those plans, Mr. McKenzie? Good morning.
Well, they said, look, the offer, this $23 billion, and it is obviously sizable, even for Alphabet. This offer has given them that confidence, the Wiz executives say, to pursue their plans. They say they are humbled by the offer, but they're going to stick with their plans to go for an IPO, to get to a point where they're turning over $1 billion in revenue per year, and they are obviously very confident in the product and the services they offer. This is a company, as you said, cybersecurity. It taps into those cloud services providers, the likes of AWS, of Amazon, Microsoft's Azure, taps into those data centers and those cloud providers and does a scan in terms of the data risks and security risks, and is clearly seeing a lot of uptake coming through from their customers. They think they can look past this offer and go with the IPO. But you're right, it's going to be a disappointment for Alphabet. They bought Mandiant about 2 years ago to try and beef up their cybersecurity offerings when it comes to their cloud services part of their business. They were hoping to add Wiz to the mix to really make it very compelling, and now they're going to have to look for other opportunities around that. And look, you pointed out earlier that this is a potential risk as well. It would have been potentially the deal around regulatory scrutiny, so maybe they avoid that. But in terms of wanting to build out their cybersecurity options and services, they're going to have to either look internally or look to potentially another acquisition.
The rejection also comes at an awkward time, considering that Alphabet executives are going to get on a call with investors and analysts after their earnings today. Tom, when it comes to the earnings, what's the focus for you?
It's going to be cloud. I think it's got to be cloud, right? In the first quarter, they saw revenues of about 30% in terms of the increase that came through for cloud services. They still are well behind Amazon. They're still well behind Microsoft and the Azure product. But that is the potential growth driver going forward. There's still concern about search and whether that's going to be cannibalized by the likes of OpenAI and Perplexity and others in terms of those generative AI models and chatbots that are layered on top of them. But so far, it seems search is holding up better than some expected, particularly if they're able to take their AI expertise that they have at Google and layer it on in terms of their advertising prospects and drive up higher margins when it comes to targeted ads. So that's something to look for as well. But it's their AI offerings to their customers as well within cloud that's going to be informative. We're also looking at the advertising sales, because that will give us a gauge as well in terms of the health of businesses in the US. So that'll be interesting. The stock is up about, 30% year to date. They were upgraded by Morgan Stanley early this morning with a higher price target. So we'll see how it all plays out for them.
Okay, Tom, thank you very much. Bloomberg's Tom McKenzie giving us a little preview of Alphabet earnings. Speaking of earnings, Tesla is set to report after the bell today. Investors looking to hear the company is juggling an increasing number of projects. Joining us is Bloomberg's Craig Trudell, who heads our global auto coverage. Craig, it is this push and pull between what Elon Musk wants people to focus on, and that is the promise of AI, the promise of robo-taxis, and just getting affordable models out. In previous earnings, that's been what's important to investors. So what is it this time?
Yeah, I think the concern going into the last set of earnings was exactly that, Danny. The concern that perhaps Tesla was putting off work on more affordable EVs in favor of going for this sort of moonshot bet on robo-taxis. And there was, interestingly, some sort of, very clear effort to put investors at ease there and talk about this idea of accelerating new models and rather than rolling those out in the second half of next year, potentially maybe even being able to get them into production before the end of this year. Heard virtually nothing about those new models in the last 3 months, but what we have heard a ton about is the robo-taxi emphasis. And so, to what extent are they actually, making progress on those more affordable vehicles that are desperately needed on the basis of, how much, sales and revenue has slowed down for this company? And, can they deliver on these robo-taxi predictions that, Musk has been making for a long time and not made good on?
Yeah, well, I mean, the delay on the robo-taxi sort of took us all a little bit aback. Look, I know Dan Ives is an uber bull on this stock, and he says, look, most of the price cuts are behind us. The bad news of price cutting is behind us. Now it's about getting to 2 million vehicles, and now it's about getting to some sweet spot in terms of margin. Well, what is it that will take the market there? Because we've had a nice run up in the stock recently. I know again, another bid up yesterday after the dip. But what is it that the market's really going to latch on to? Is it going to be the number and the projections, or the margins? What is it that's going to turn the dial for them?
Yeah, I think the run-up was started by this, reassurance that we're going to roll out new models. But again, the sort of show there has been absent. And I do think that, unless this company does freshen up the lineup, the Cybertruck is new, but is a very high-priced vehicle, built and sold in low volumes. It's not going to sort of, usher in this new era of growth for Tesla the way the Model Y did. What this company needs is a more affordable EV that's going to drive, revenue growth and sort of tide them over until they're able to make some progress on these self-driving efforts.
Okay, let's see what they deliver this evening. I wonder will he say anything about Trump. There you go. That's what I'm more sort of curious about on the call.
No doubt.
That's a good point. I'm sure investors would not want him to be focusing on politics on the call.
We don't want him diverted onto that, now that he's got the paycheck. Craig, thank you very much. Excited to see what those numbers are a little bit later on today. We're also going to get some earnings from the consumer side of the market. UPS, Coca-Cola, they're going to deliver their numbers. Dasha Afasnavia joins us now with the expectation. So Coke, they got away with raising prices like Billy O earlier in the year. How's the consumer going to react in this earnings season? Dasha?
So the consumers kind of had enough, and I think particularly the lower-end consumers are really done with price rises and, in fact, are switching out of branded products, particularly for things like food. PepsiCo has already reported, and the CEO, Ramon Laguarta, said a couple of weeks ago that there's clearly a consumer that is challenged in the US, and they're trading out of particularly food. And it's not true for all consumers, but some consumers, and I think Coke is going to be feeling that as well. This is a result of COVID-era stimulus being tapered off over the last year or so. It's also, people just being very fed up and stretched by high interest rates and high mortgage rates. And that's what's impacting consumer goods companies. So they're having to give consumers better value, which of course has an impact on margins. On top of that, UPS has a new CFO, and it's got a new strategy. So I think investors will be looking to that to see whether their margin expansion plans are working. Whereas Coke, as well as the stretched US consumer, it is also looking at China, where there's also been a slowdown.
Dasha, thank you so much. Bloomberg's Dasha Afasnasieva. And yeah, man, it's been really remarkable. It's not just Pepsi, it's not just Domino's, but it's also the airlines. You point out Ryanair also having an issue.
I mean, they're talking about
seat capacity, talking about prices. You look at the price rise that Coca-Cola managed to put through earlier in this year, and they are a monster. What else have we got? What else is on deck? We'll take you through it in just a moment.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Kranny in New York. Okay, let's get you set up for your trading day on this Tuesday. And it is earnings galore. GM, UPS, Coca-Cola, Lockheed Martin, all on deck before the bell. Then we're going to get some eco data. We're going to get U.S. existing home sales at 10 a.m. And then more earnings after the close, specifically Alphabet and Tesla.
Some stocks to watch. Stellantis, U.S. regulator, looking into complaints that the engines in Stellantis vehicles stalled the number of vehicles affected. 150,000 semis, dragging tech a little bit lower. Danny, you mentioned this. NXP semiconductors fall, revenue disappoints. And then we have GM, high ahead of earnings before the bell. The results come after posting the company's best quarterly pickup truck sales in 3 years. I didn't get a pickup truck.
You can't drive a pickup truck in New York City.
You want me to watch football here? You want me to watch basketball?
I'll let you go full American, but not the pickup. How are you going to drive it in New York? You're going to crash into everything.
I can see myself driving up or down Fifth Avenue in my pickup truck. There we go. There's an image for you.
Right. That's it for Brief. Surveillance, that's up ahead here on Bloomberg.
what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
AI theme is still expected to do most of the heavy lifting for earnings growth.
We think the market has been a momentum, growth, and size market this year.
We're hoping that some of that performance can spread into the smaller cap area.
We all know breadth has been far too narrow, right? And that leadership needs to expand.
I really want to see which way the earnings go. The big tech names, continue their dominance. Maybe things get a little bit better. I can see investors going back there pretty easily.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Bloomberg Surveillance starts right now, live from New York City this morning. Good morning for our audience worldwide. Equity futures on the S&P 500 just a little bit softer. Coming into Tuesday after snapping a 3-day losing streak on the S&P. The Nasdaq 100 with its best day since early June. The Mag 7 is back, bouncing back in a major way, and the earnings drop a little bit later on this afternoon. It begins after the close. We will hear from Tesla and Alphabet. Then on to next week when the majors start to report in a much bigger way. A little bit later this morning, Bram, I want to watch 6:30 GM.
Yeah, we've got GM this morning. We also have UPS. We also have Coca-Cola. We have about 20% of the S&P 500 market cap reporting this week alone. This is when we start to talk more about what companies are actually doing, which is something that a lot of investors who come on this show say that is actually tradable versus just simply the speculation around macro as well as political noise, as a lot of people are trying to call it.
How many people have come on this program and poured cold water over the small caps in the last 24 hours? We had David George of Baird coming on and saying, fade the rally that you're seeing in regional banks over the last few weeks. Lisa Shannon at Morgan Stanley making a similar point, saying, don't chase this, don't chase this. Barclays, this note just drops. So bear with me as I read it for you. Mid-year outlook, upgrading the price target, 5,600 from 53. Guess what they like? They like growth stocks. They say the recent sell-off looks contained. Lisa, valuation reset leaves more room for preferred themes. One of those themes, large over small.
This is what we have heard from so many investors. Even when we have later this morning, someone who focuses on small caps, Jill Carey Hall of Bank of America, she thinks that they're undervalued, but sees reason for it in terms of small caps. The issue here is that the winners are going to keep on winning, and the idea of any sell-off or pullback in the Magnificent Seven evidently is being viewed as a buying opportunity. John Stoltzfus, also coming up later, has the same idea at a time when people really recognize that the economy is slowing.
Phrase of the week so far, you used it, cut through the noise. Noise being politics. Let's talk about the politics. Kamala Harris, 81-year-old President Joe Biden stepping aside, stepping out of the race. What did she raise in 24 hours? $81 million. Can't miss that.
You can't miss it. A lot of the donors really and the funds were drying up when there was speculation and concern about whether or not Biden could continue on this path and seek re-election. Within 24 hours, you do see some momentum behind her. She's re-energizing the base. The more interesting stat on that is more than 60% of these donors are first-time contributors to the 2024 race. So this just shows that she's bringing a lot of excitement. Obviously, she's somewhat of a fresh face. She's young when it comes to this Democratic ticket. That's exciting a lot of people. And today, Jonathan, it's really going to be her kicking off the campaign in earnest when she heads off to Milwaukee, Wisconsin.
Just getting some numbers I want to bring to you as well before we get deeper into the politics. Let's talk about UPS. Second quarter results just dropping. EPS coming in at 179, the estimate 198. Revenue, Lisa, coming in at 21.8 billion, the estimate 22.21. So a little bit of a downside surprise on the top and bottom line there.
And talking about full year expected revenue of about 93 billion versus the expected 92 to 90, almost 95 billion. So really even ratcheting back expectations for the full year. When you look inside the numbers, what I find interesting, and this goes to the macroeconomic backdrop, how much is this because consumers are actually spending less on shipping packages? U.S. package revenue was down about 2% year over year and below estimates. International package revenue also below estimates. How much are we looking at a retracement that goes beyond just simply a goods versus services shift to people being a little bit more discretionary?
Isn't this the biggest challenge to the broadening out story of the moment? The earnings picture we're getting from the airlines, not great. Started with Delta, saw it with Pepsi. Are we seeing it again this morning in UPS?
I'm curious to hear what somebody has to say. That is what it smells like, although UPS has been facing a lot of issues with respect to revenues, with respect to expenses, cutting certain businesses in response to labor negotiations. However, that said, we are definitely looking at increasing commentary from companies saying this is a different consumer, one that is ratcheting back and much more price sensitive, and perhaps we're seeing that today in the UPS numbers.
That stock is down in the pre-market by a little more than 4%. We mentioned this moments ago, 6:30 Eastern time. So in about 26 minutes, we'll get numbers from GM. Look out for that. Equity futures right now on the S&P 500, a little bit softer. We're down 0.1% in the bond market. Treasuries rally, yields are lower by a couple of basis points, 423. Can't get through a bond market check without talking about what? Supply. Lisa, what's coming up?
We've got $69 billion of two-year notes today. We've got $70 billion of five-year notes tomorrow, $44 billion of seven-year notes on Thursday. This matters at a time when people are talking about the one constant, no matter who wins the presidential election, that is the fiscal deficit, and that no one is talking about reducing it in any kind of material way. That is the reason why bond supply matters.
That's the promise right now. More debt, more debt. That's something they can deliver if you want it. Coming up this hour, Brian Levitt of Invesco following the S&P 500's best day in more than a month. Isaac Boltanski of BTIG as Kamala Harris closes in on the Democratic nomination, and Bloomberg's Craig Trudell ahead of Tesla earnings after the bell a little bit later. We begin with our top story. The S&P 500 posting its best day in more than a month as investors look through messy politics. Brian Levitt of Invesco writing this: I don't believe that these markets will be trading based on Trump's or Harris's prospects, but rather on the direction of the economy and Fed action. I find the talk of the Trump trade versus the non-Trump trade to be much ado about nothing. Brian, good morning. That's music to the ears of a lot of people after politics has dominated the conversation in this country, in this market as well, for the last few weeks. What do you think is the number one issue right now?
I think it's the direction of the economy. And so you may remember I was here about a week ago and I said, for the first time in a while, I'm getting a little bit more defensive. Then you have a big rally in small caps and my thought is, oh, these folks are never going to have me back. But I still continue to believe that we want to be a little bit more defensive. It doesn't mean equities can't do well, but to what you were talking about earlier, it's the larger cap, it's the higher quality, it's because growth's slowing. Now, ultimately, I think the Federal Reserve pivots. So for the week after I was on the show, the focus was on the Fed cutting rates. Now the focus is back towards growth slowing. We'll get to the point where the focus is again on the Fed. We've priced in the couple of rate cuts now and things will broaden out. But in the near term, it's more of a defensive environment as the economy slows.
I've got a quote in front of me from Morgan Stanley, and I think it might resonate with you. It's from Lisa Shallett. She said, unlike cyclicals and unlike cycles, when Fed rate cuts precede recession and re-accelerating economic growth sustainably impacts the high beta small cap cohort, this time a Goldilocks soft landing is apt to reward large cap quality names that can deliver margin gains despite modest economic growth. Is that how you're thinking about things?
It is, although I wouldn't say that it doesn't involve the small caps. Because if you can get through this period with without a recession, I agree, then large caps should do well, the broad market should do well. But typically, if you look historically when the yield curve normalizes, the yield curve normalizing, you tend to see more participation from small and value. And investors have been wondering why this market's been so narrow. We've had 20 months of an inverted yield curve, maybe 21 months of an inverted yield curve now. So that's a challenge. This will change as we normalize the curve. But the problem in the short term is that we've priced in the rate cuts and the economy's slowing. You know, we've priced in a couple. So we'll need to see more carry through and more signs that this economy can be resilient before things start to broaden again.
I like that the market message and the political message is the same. It's the economy is stupid. And look at what's going on with respect to consumers and their happiness level. Are we getting a signal from the likes of UPS, from the likes of the airlines, from some of the commentary that we've heard early coming out in this earnings season that highlights just how quickly growth is slowing to you?
Yeah, I think so. And look, we have to remember that was the wish. You know, it was a year ago when things were robust and everybody was worried about inflation, and we heard things like hyperinflation and stagflation, and everyone was trying to be hyperbolic on these things. That was never going to be the case. The reality was the Fed was going to slow the economy, the fiscal stimulus was going to moderate, and consumers were going to start to slow down. Inflation was going to come back into the comfort zone. So that's where we are. So we can't wish for something and then when it happens, be disappointed that it's happening. And so, yeah, things are slowing in the U.S. The global economy slowing in the U.S. is a big part of that right now.
How do you assess whether this is just one data point on a different kind of trajectory downward that's perhaps a little more dramatic versus simply the Goldilocks softening that everybody was hoping for?
Well, if you look for the guideposts on a path to recession, usually see cyclical excess. We don't have that. We do have the inverted yield curve. So far, we're 1 out of 2. You see signs that the economy's slowing. You look at survey data. It's not great, but it's not collapsing. And then the most important one is our credit spreads widening and our bankers tightening lending standards. Not really. So you would look at that and say the economy is in reasonably good shape. It doesn't suggest a recession, but the survey data suggests things are certainly slowing down.
If you don't think right now the Trump versus non-Trump trade is much ado about nothing, when does it become something to do about something?
I'm not sure it does. I know, my big North Star on that, I've been watching it the entire time. From the day Trump was elected through the day Biden was elected, the market was up 70%. Since Biden's been elected, the market's up 70-something%. So I'm not sure why people focus on this that much. And I'll give you an example. When it looked after the debate, post-debate, and Trump's numbers are going up, probability of winning, I'm getting these notes in my inbox that say, okay, here's the Trump trade. Crypto goes up. European defense companies go up. You want to be short Chinese equities. And I'm scratching my head saying, wasn't that the last 4 years? Right? That's exactly what happened over the last 4 years. The other thing is, if I were to have been here in November 2016 when Trump won, and I said, what would win, traditional energy or clean energy? Everyone would have said traditional energy, clean energy won by a lot. The exact opposite happened under Biden, where traditional energy won by a lot. And I have people saying to me, drill, baby, drill. If Trump wins, surely we're going to get back to drilling. We're drilling more barrels of oil right now than ever before in U.S. history. So I think people are looking at this wrong. I think people have their own perceptions, their own confirmation biases that they bring to it. But when you dig deeper, right, the Trump trade is energy and financials. Energy and financials did better under Biden than they did under Trump. So it just doesn't add up when you look deeper into it.
Let's park history and let's focus on one specific thing, policy and where we are right now. If you come in now and cut immigration and put up tariffs and put up walls around the United States of America, do you not see how that would be inflationary? If you extend the 2017 tax cuts, do you not see that that would be boosting the deficit at a time where actually there are things that people are nervous about, the prospect of inflation re-accelerating, the ability of the Treasury market to handle that additional supply?
Well, it may also be happening at the same time that the consumer's slowing a bit in here. So, you have counteracting forces against inflation, things like AI, things like older population. So I wouldn't necessarily say it's inflationary. To the market, what's going to matter most on all of these things is clarity. Give us some understanding of what this looks like, rather than when we did it in 2018, there was uncertainty. And so business investment dried up for a while with a lack of understanding of what it was going to look like. So long as there's clarity, the business environment will be able to handle it. Consumers will be able to handle it. And look, the reality is both sides seem to want to pursue somewhat of an American first agenda. So there's not a substantial amount of difference with regards to this America first approach.
All those conversations about politics you've been having on Wall Street, freezing cold water all over it. From Brian Levitt of Invesco. Brian, it's good to see you.
My pleasure.
Thank you, sir. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's get across to Danny Berger. Morning, Danny.
Good morning, John. Secret Service Director Kimberly Cheadle is facing bipartisan calls for her resignation. Cheadle told lawmakers she takes full responsibility for security lapses, which led to the assassination attempt on former President Donald Trump. Cheadle went on to say the Secret Service was made aware of a suspicious person between 2 and 5 times on the day of the rally where Trump was shot, but did not go into further detail. Shares of Porsche slumping in Europe. It cut its outlook for the year, saying a shortage of aluminum parts will affect all of its vehicles and could impact output by several weeks. This shortage will also cause it to stop production on some of its models. Porsche is now expecting a return of sales up to 15%, down from 17%. The company is also reducing its forecast in China and the proportion of EVs it will sell. Warner Brothers Discovery offered to match Amazon's NBA TV rights package, taking advantage of a clause in its expiring contract with the NBA. The NBA is on the verge of signing an 11-year deal, $76 billion, a broadcast package with ESPN and 2 new partners, Comcast, NBC, and Amazon. Amazon agreeing to pay about $1.8 billion annually. Warner Brothers, which has over $40 billion in debt, has obtained a letter of credit to support its bid, according to Bloomberg reporting. And that's your brief, John.
Hey, Danny, thanks for that. Up next on the program, Kamala Harris hitting the campaign trail.
It is my great honor to have Joe's endorsement in this race. And it is my intention to go out and earn this nomination and to win.
That conversation just around the corner. That's up next, live from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City, welcome to the program. Pulling back just a little bit on equity futures. We're down by 0.05% after a decent rally yesterday. across the board. Bond market rallying into some supply through the week. Lisa will bring you the numbers again in just a moment. Yields are lower by 2 basis points. The 10-year, 422.91. Under surveillance this morning, Kamala Harris hitting the campaign trail.
It is my great honor to have Joe's endorsement in this race. And it is my intention to go out and earn this nomination and to win.
The name has changed at the top of the ticket, but the mission hasn't changed at all. And by the way, I'm not going anywhere. I'm going to be out there in the campaign with her, with Kamala. I'm going to be working like hell.
Here's the latest. An unofficial AP tally has Harris surpassing the number of pledged delegates needed to secure the top of the ticket. President Joe Biden calling into campaign headquarters to offer his support in his first public comment since ending his campaign. Isaac Boltanski of BTIG says this: "We continue to believe it will be a close race, and we maintain our view that Trump is the slight favorite." Isaac joins us now for more. Isaac, let's start with the numbers. Follow the money. $81 million raised in 24 hours, more than $100 million donated to the campaign since Sunday, and yet your fundamental view hasn't changed. Isaac, why?
So look, the money that came in for the Harris campaign, I think, is a representation of the relief that's washed over the Democratic Party, given that Biden is stepping aside and they think that they have someone who can prosecute the case against Donald Trump in this election. But our view of this is that we still have probably 7 or 8 different narrative changes between now and November 5th. And when I peel back that onion and I look at the swing states that are going to define this, right, the ones that are going to actually decide this election, and you look at those 6 states, the issues that animate voters the most in those 6 states thus far have been immigration and inflation. And if that's still the case on November 5th, I think that Donald Trump is going to be the next president. The caveat here is no one knows what we're going to be talking about in 105 days. We've got to keep in mind, it was just 25 days ago or so when the debate happened and it reset the entire election. So we're going to have to deal with these narratives changing. And during that time of great uncertainty, I'm just going to keep going back to what animates the swing state voter.
When you look at the issues, this is why a recent poll showed that actually majority of Americans thought Trump's presidency was a success versus Biden's. If that's the case, then how does Harris differentiate herself from Joe Biden? He said there he wants to go on the campaign trail with her. Does she want him there?
Yeah, look, I think that in certain places, absolutely. I think that President Biden's going to spend a whole lot of time in Pennsylvania over the next few months. But I think that the Harris campaign, got to get used to saying that now, is going to enjoy some of those contrasts, Anne-Marie. Like, I really think, I don't think there's any example in modern political history of a vulnerability like age becoming weaponized this quickly with the switch in the top of the Democratic ticket. Age was their greatest weakness. It is now the cudgel that they're going to use to push back against Trump. So that's what you're going to hear a fair amount about. You're going to hear the fact that Trump is a convicted felon. The vice president is a former prosecutor. And of course, we're going to hear an enormous amount about reproductive rights, given that that's the one area that you've seen Democrats have success with animating voters in those swing states.
And she's been the face of that for this administration. But beyond reproductive rights, she was a prosecutor, but she was a vice president and a senator. But we haven't really understood what her core values are on a lot of policy issues. What differentiates herself?
Look, at the moment, the way that I'm thinking about this is I'm telling clients that there really isn't much daylight between Biden and Harris. I think that a Harris one administration would look a whole lot like Biden one. There is good reason to believe that Harris is more progressive ideologically than Biden, but this has been a relatively progressive administration the past few years, so I don't see much of a shift there. Furthermore, we've got to keep in mind presidents are often limited by the other side of Pennsylvania Avenue, right? And we still firmly believe that the Senate is going to switch to Republican control. So what can be done there is limited. I do think that there are going to be subtle areas of difference in terms of trade policy and in terms of how they would push forward on the issue of fiscal policy and the expiring tax cuts. But it's all very subtle when you compare it to how Trump would do those things.
Isaac, markets would agree with you, and betting markets seem to suggest that generally people do believe that Trump still has the edge, although it has narrowed just slightly. I am wondering, though, about the bigger issue some people are saying, which is there is new energy in terms of bringing out voters, that potentially that could affect the down ballot races for congressional House and Senate seats. Do you buy that argument?
For the moment, yeah. I mean, look, the most surprising stat of many over the past few months has been the yawning enthusiasm gap when Biden was at the top of the ticket. 77% of Republicans were happy with their candidate. Only about a third of Democrats were happy with their candidate when Biden was at the top of the ticket. You're going to see that normalize, and you're going to see that gap close. And I think that will have an impact on the House races. And this is something that I think is important to hit. The House is going to be close no matter what. That is the reality from the gerrymandered system that we all live in. So the House is going to be plus 10 or 15 seats one way or the other. So it will be very, very close. And in that instance, I do believe that you're going to have an impact from this. And I think that it pushes back against the red wave narrative that we had all been seeing over the past few weeks. I think the House is going to be very, very close. My bet is the House goes whichever way the White House does, but it will be within a few seats.
Isaac, I want to speak to what you're telling your client base, specifically the client base in the investor community. When you put out the note over the weekend following this decision, there's a line that jumped off the page to all of us around this table. You said focus on electability and not policy. Just build on that a little bit more. What have you been telling clients about that?
Well, I think after the disastrous debate performance, I think everyone was trying to parse where the policy differences would be between Harris and Biden, right? And we were all going through her Senate record. We're going back to her actions as AG in California. And I just don't think that there's much value in that, because they replaced the top of the ticket on the Democratic side, not because of policy, but because of age and cognitive capacity. Right. And I think that the similarity between Harris and Biden is a feature, not a bug. And so to me, it's just really a question of how she impacts this race rather than the policy substance. So is she able to change the dynamics in Georgia and get voter turnout within the black population, which is unclear that Biden was able to do in Georgia. It's unclear if that would have been there. How is she going to impact women and independent voters in some of those swing states in the Sun Belt? Those are the things that I think matter way more for markets and all of us trying to get our arms around this election than subtle differences between them, between Biden and Harris and their policy perspectives.
Isaac, with that being said, was J.D. Vance the right pick for Trump?
At the moment, it sure doesn't look like it was, right? I mean, I think that hindsight is something that really underscores the humility that all of us should have here. But at that moment, I think that Trump wanted to run up the score with his base, right? He wanted this to run up the score in Ohio and Pennsylvania and Michigan and Wisconsin with white, non-college educated voters. And I think that at that moment, he didn't worry too much about some of the other subsets. And J.D. Vance really does not help you with many other voter groups. And so at the moment, it sure doesn't look like the right one. But I think Anne-Marie really underscores the importance of who the vice president picks as her running mate. And I think that she is going to focus intently on someone that can help her in one of those swing states to broaden the base. That's why you're looking at Josh Shapiro, the governor of Pennsylvania, or even Andy Beshear.
Isaac, thank you, sir. Just wonderful over the last couple of days. Isaac Boltanski there of BTIG. Based on how this race has gone so far, I think we're waiting for that first report about Trump changing his VP, right?
I mean, you heard it here first. John, do you want to break some news?
You can do whatever you want these days, right? You pick your nominee, you can change it 4 months before.
Maybe there'll be a different Republican nominee.
Come on.
There's not going to be a different Republican nominee.
Coming up, Tesla earnings a little bit later.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera. And I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
So yesterday we snapped a 3-day losing streak on the S&P 500, which is quite a strong bounce. Max 7 leading the way, going into earnings for big tech. Equity futures this morning just about turning positive on the S&P, lower on the Nasdaq 100 by 0.1%, and up by 0.25% on the small caps. Into the bond market, 2-year, 10-year, 30-year, looking a little something like this, 450. On a 2-year, we're down a single basis point. Later on this hour, we'll catch up with Ian Shepherdson of Pantheon Macroeconomics, and Ian thinks this Fed is going to ease more than you think and more than they think. That's a big call.
And there are a number of people who are kind of lining up behind him. Nick Colas over at DataTrack pointed to 2 New York Fed models that actually put the neutral rate below 1.5%. We're talking about 1.5% versus the current 5.25% to 5.5%. If that were the case, it would suggest what Ian Shepherdson is talking about, a much more dramatic rate-cutting cycle that many people are pricing in.
Look out for that chat, that conversation with Ian in just a moment. Switch up the board and turn a page. I want to finish on foreign exchange and look specifically at the strength we're seeing in the Japanese yen for the second session. Dollar yen down to 156.13. All this chat, all this talk, bigger conversations about rate hikes in Japan. We published this story today here at Bloomberg over in Tokyo. Bank of Japan officials see weakness in consumer spending complicating their decision over whether to raise interest rates at a policy meeting next week. That, Lisa, according to people familiar with the matter.
This is the problem that they're grappling with. They're dealing with an economy that does seem to have the inflation that would be required to actually normalize policy rates for the first time in, however many decades. But this is going to be really difficult because if they are seeing weakening trends, how do they justify it now other than just simply saying it's a currency move? Interesting that the market's moving anyway. Because essentially what this is a recognition of the difficulty that they're facing because the yen has weakened to such a degree. And maybe that alone is enough to sort of placate some of the bears in the currency.
Do you think this is speaking to what Mohamed El-Erian was talking about, that the lack of strategic views at some major central banks are leading them to become hypersensitive on one data point, here, there, and everywhere? Because if you were taking a strategic view, the recent data wouldn't really matter that much, would it? Just the one hike at the BOJ? Does this really change things?
Absolutely not. When I take a step back, when I talk about the humility and everyone's saying, everyone be humble, well, I am feeling very humble because everyone's gotten it wrong. And you can make a really strong argument for this market being ready for a resurgence in inflation and this being a pause before something more significant. And you can make a really legitimate argument that we're seeing a real softening patch that's going to just get dramatically worse later into this year. You can make either argument looking at different sectors, and I believe you. So I understand the humility and also the difficulty coming up with the correct construct for some of these central bankers to follow.
I don't know a single person who hasn't been humbled at some point post-pandemic in this business. It's kind of been the business to be humbled. Under surveillance this morning are top stories. Here's the first one. Kamala Harris closing in on the Democratic nomination. An unofficial tally from Associated Press showing Harris surpassing the required number of pledged delegates to seal the top of the ticket. Harris holding her first campaign rally this afternoon in Milwaukee, where the RNC held its convention, Anne-Marie, just last week.
Swing state. She's going to be in and out of this state state a lot through the next 100 and so days. What I find interesting about her campaign rally today is not so much Kamala Harris showing up, but Senator Tammy Baldwin showing up. She snubbed Biden recently when he was in Madison, Wisconsin. She wrote a letter a few weeks ago expressing her concerns about Biden being the top of the ticket. If Kamala Harris isn't able to herself win the election November 5th, potentially she's going to help down ballot. And that's what we continuously hear to some of these crucial seats in swing states. They were concerned about Biden ruining their ticket.
This is what we heard from Chris Kruger over at TD as well, when Chris had to say down ballot, good for Democrats. The House and Senate just became more interesting. A GOP wave is still possible, though far less likely without Biden as the nominee. That's down ballot. Let's talk about the race between the likes of Trump and Harris. TD also making this point, I think it's an important one. Can Harris make this a choice between Harris and Trump, or is this still a referendum on the Biden administration, of which she is a major part of and has been over the last 3.5 years?
Well, it depends, and I think it has to do with what voters care about right now. But to Isaac's point, does the narrative start to change? We've seen so many changes this election cycle. As of today, the two top issues remain the economy and immigration. And when you ask voters who do they trust more in those two issues, they go to Trump. So if they're going to vote with their top issue, this looks like Trump has the leeway, and he's ahead on these crucial issues. But she is going to lean hard into women's reproductive rights, which we have seen a winning issue when it came to the midterms.
This is the reason why I'm so interested to see how Republicans really coalesce around a message to attack Kamala Harris. It seems like there are some kind of counter forces in terms of what to go after her with, and that I think is going to be telling in terms of whether it's a referendum on Biden or whether it's something else.
Big questions, and big question we'll all be asking over the next 4 months or so. Let's turn to a warning from Delta. Trouble for this airline. The airline telling customers to expect more cancellations this week as it tries to recover from Friday's tech outage. Delta grounding almost 4,700 flights in the last 4 days, when most other airlines have resolved their issues by Sunday. This does not look good for this airline, does it?
And first, I just want to say, for all the people who've been stranded, I feel for you, because we've all been there, and it's a horrible feeling, and it's happening in mass with people who are looking for hotel rooms and cars, who have to wait in long lines. This is a disaster. Why? Because this CrowdStrike outage hit their crew organization charts, essentially. So they didn't know where their crews were. Yeah. So getting it all together has been incredibly complicated and has been very difficult to get back up to speed. This just goes to show how airlines kind of are dancing on a high wire. On one hand, they're attacked if they raise their prices too much, especially among the rank and file lower income consumers. On the flip side, if they make a mistake, they're on hook for big costs. And Pete Buttigieg is coming out and saying, you know, you got to pay more and do more. And there are complaints that they're not doing enough.
I have to say, Pete's very popular when he comes out and does whatever you just said he
completely.
does.
I mean, that's what everyone wants to hear. When you are left stranded somewhere, say Atlanta, that is a very, very
pictures
frustrating.
from Atlanta.
It is such a horrible feeling.
The videos out there of Atlanta from the last couple of days, brutal. We said this Friday. Biggest difficulty for the airlines once everything gets up and running is finding out where the planes are and where the people are and to get the schedule back on track. Some airlines clearly over the weekend did a better job than Delta. Let's turn to the autos. I want to turn to GM, rising the pre-market big time by more than 5%. Bramo, the numbers dropped just moments ago.
And what I find interesting about this is, why did they do better than expected and increase their full year forecast? Because of gas-powered trucks, going back to what they do best, the GM truck. This, to me, really highlights just how much maybe some of these companies are going back to their roots to really get the earnings that they had previously expected. They earned $3.06 on a share on an adjusted basis in the second quarter. That's up from $1.91 a year ago. So we're talking about UPS going down some incredible 30% in revenues. You're seeing the exact opposite, almost a doubling in income at GM as they adopt a more hybrid model of the sales that they have.
Hybrid, the key phrase there, the key word. That's a company, Mary Barra and GM, they've had to pivot big time over the last 12 months. We'll get Tesla a little bit later. Bloomberg's Craig Trudeau joins us now from London for more on that. Craig, we just had General Motors. To Lisa's point, it's been tricky. It's been tricky for some of these legacy players to make the pivot to EV and then back again to something in between. What are you expecting to hear from Tesla a little bit later?
Yeah, it's going to be very interesting. I mean, just a few weeks ago, we saw, Tesla just narrowly beat expectations for vehicle sales, and a huge move in the stock as a reaction to that. And if you really sort of dug through the numbers, you notice that, my goodness, the consensus really came down in dramatic fashion. I think what we've seen with the earnings estimates is something very similar, where whether you look at revenue or margins or just earnings in general for this company, the expectations, the bar has been lowered in really dramatic fashion. I mean, EPS has roughly halved over the last year, and it absolutely will be interesting to see, how the sort of, numbers are taken, of course. But as we all know with Tesla, more so than the numbers, what really matters is what Musk has to say. And I think what's been remarkable this year is the deterioration in fundamentals for this company that have been just absolutely overlooked the last few months, as Musk has really leaned into his AI messaging, his robo-taxi promises, and that has been effective in really moving the shares and staging this massive recovery.
And the latest is humanoid robots, which also has offered a huge boost to the share prices. You really phrased that beautifully, because it shows how Tesla is not being viewed as a car company. It is a company of hope, of technological prowess sometime in the future that doesn't ever seem to come on schedule. At what point are we seeing that the nuts and bolts of a car company, a true dyed-in-the-wool car company of General Motors, showing the differential between, say, GM and a Tesla that's still riding on a lot of hope?
Yeah, I think it's interesting. I'm reminded just a few months ago when Tesla put out their earnings presentation and sort of alluded to the idea of, many of its competitors sort of paring back their plans for EVs, reinvesting in hybrids or pivoting back to hybrids as GM has. And, Tesla coming out and sort of speaking, taking a stance on its competitors and saying, we believe that this is the wrong call. I mean, I think we're seeing, left and right companies, only adding to those decisions to make that call that, Tesla has come out and criticized. And it does make you wonder, with Tesla, I mean, you wouldn't have thought this would possibly, be within the realm of possibility. But just, this week, Musk has talked about, the need for oil and gas for civilization. I never would have thought, that I would see that, coming off of his, Twitter fingers. I guess not out of his mouth, but he's talked about this idea of being realistic about the what's needed in the future, and for him to so dramatically change his messaging to kind of fit with the change in his politics. I think that, of course, will be something that we'll be listening for on the call. Is to what extent do some analysts press him a little bit about his political transformation?
Craig, can we just take a step back and talk about developments over the last month? We've said repeatedly that the carrot over this stock was the robo-taxi business, the announcement we were expecting in early August, and then we had reporting here at Bloomberg, led by Ed Ludlow and the team, that robo-taxi announcement wasn't happening in August. And then we sat here waiting for pushback from the company, and pushback that I didn't see. Have we got clarity on when we're actually going to hear from them?
Yeah, we did get confirmation a few days later from Musk that he did ask for a change to the design of these prototypes, as Dana Hull and Ed Ludlow reported. He did not specifically confirm when exactly this event will be staged. I think there's a lot of expectation on the basis of our report that it will slip to October, as we had heard. But of course, I think Musk also is the sort of ultimate showman, and likes to really keep pressure heaped onto his team. So I think it is an open question whether or not he within the last few days or week or so has said, you know what, I was going to give you until October, but now it's September. So that will be something that people are very keen to hear more on, because it's not just a matter of staging this event and sort of living up to this hype that he's built up over the last few months, but also really having something to show in terms of a business plan, taking these from prototype stage to actually building a business. And that's going to be, I think, a lot more difficult than maybe the market is sort of baking in here.
Hey, Craig, thank you, sir. Craig Trudell of Bloomberg, ahead of those numbers after the bell a little bit later. Tesla in the pre-market up by something like 0.75%. That stock has absolutely surged, ripped off the bottom of this year. in April. I think we're up by something like 70% plus since then. I have to say, Elon Musk had a major win, a massive win, Sunday afternoon at 1:46 Eastern Time in Delaware. Why? The president did not address the cameras. He did not put out a statement in the way you might anticipate. It dropped on where? It dropped on X. Of all the places, it dropped on the platform formerly known as Twitter. So we can sit here and talk about Elon Musk and his management of that particular platform. Fact of the matter is, when the president had one of the major political decisions of his career of the last 50 years, he chose that platform.
Which a lot of people are wondering why, for a whole host of reasons. But the bottom line is, if you want to distribute things in mass, that is the way to do it. So you're correct. It's sort of still an open question, though, Anne Marie, exactly why it was done that particular way.
Open question, and maybe we'll find out today. We will see eyes on the president. We haven't seen him since July 17th. Would it be he's going to be leaving Rehoboth Beach just after noon? It was a little bit awkward, though, given the fact that Trump is out there embracing Musk and basically just so excited that he's donating some $40 million a month to his campaign. So kind of weird that Biden would then give Musk a win and make this major historic announcement on his platform.
It's a big win, that's for sure. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Quite a few earnings this morning to get through. UPS sliding in the pre-market down more than 7.2%. Higher labor costs and soft demand for packages led them to fall short of estimates in the second quarter. It's also grappling with higher costs from its Teamsters union contract, which UPS says would be front-loaded. The shipping giant trimmed its full-year outlook while restarting its buyback program, targeting $1 billion annually. Meanwhile, Spotify also reporting moments ago shares are soaring in the pre-market, up more than 14%. The streaming giant reported big gains in subscriber growth for the second quarter. Paid subscribers grew 12% from a year ago to 246 million. That beat estimates. Even though Spotify has been rolling out price increases over the last year, it's still been able to add subscribers. Its premium plan currently costs $11.99 a month. Spotify has instead focused on cutting costs to boost profitability, reducing its workforce, and pulling back on podcast production. Cybersecurity startup Wiz has rejected a $23 billion takeover bid from Alphabet. Instead, the company will stick with its plan to go public. Google's parent company offered to buy it in an effort to catch up with Microsoft and Amazon in a competitive cloud services market. Wiz connects to cloud storage providers like AWS and Microsoft Azure in order to scan for security risks. Alphabet did not immediately respond for comment. The company reports earnings after the bell today. And that's your brief, John.
Hey, Danny, thank you. More from Danny a little bit later this morning. Up next on the program, a tax fight on the horizon.
If you're focused on, what is the platform going to be, call up the House Democratic Ways and Means Committee members. They already wrote this bill, and they published it several years ago. And it is, signed, sealed, delivered from the Democratic Party, ready to go to Kamala Harris.
That's up next from New York.